The stock market is a device for transferring money from impatient people to patient people. They're buried alive right now because none of these companies are dead. This is the type of stuff that happened in the great financial crisis. Cold stocks you're seeing right now in front of you, those cold stocks a year or two from now could be the red hot stocks. You're about to see the biggest IPOs you've ever seen in history. We're talking SpaceX. Every time it's a trap, and it's a new trap. You could have stocks, you could have sectors be the hot plays for months, sometimes even years, multi-years. Those runs come to an end. Nothing is up to the right. Nothing's down to the left. High probability we have another major crash in this decade. So you gotta beat revenue, you gotta beat margins, and you have to beat earnings per share. But then additionally, you have to beat your guidance. You ready to flip some flapjacks? The stock market is a device for transferring money from impatient people to patient people. Have you ever heard that expression or saying before? I love that one. I think it's a Warren Buffett quote, but I'm not 100% sure, but I've always loved that one. And this is so true, especially on a year like this, right? You're looking at stocks like AMD, stocks like Micron, that people had called dead money stocks for the longest time, right? They had been not doing anything for several years, and then they just go on absolutely incredible runs, going up hundreds of percent or thousands of percent, right? And I want to talk a little bit in this video about some moves I'm seeing out there in the market here today. Okay, we got a lot of big moves out there, so I want to just spend a moment talk about some of the opportunities I see out there and where some of the other stocks that I've thought about taking profits on are, and those sorts of things. Okay, after you get done going through that, I posted this a bit ago. Okay, I posted this maybe an hour ago now at this point in time or so. Looks like about 15,000 people have gotten to see it on my X page. I said if you had to go all in one of these stocks in a screenshot for the next 5 years, which one are you picking? I want to, in this video, tell you if I was forced to go all in one of these stocks for the next 5 years, I'll tell you exactly what stock I will pick. After you get done going through that, I spent $89,000 on some stocks here today. A huge buy day for me. I'm going to share exactly what stocks I bought, why I went ahead and did that. After you get done going through that, I want to go ahead and react to the Wall Streeters on their opinions on where this market's headed from here, taking profits on stocks, buying stocks, all that good stuff. Okay, I appreciate you for joining me as always. We got a lot to get through in this one here today. I need one thing real quick before we get rolling. If you could just smash that little like button, that little thumbs up icon, that would mean the world to me. Thank you everybody that's already done it. I appreciate you in the biggest way. Thank you so much, okay? Alrighty, ladies and gentlemen. Alrighty. So, we got big moves going on all over the place out there, right? Shopify was up nearly 8% here today. Shopify remains a great long-term opportunity. American Express was up big, about a 4% move there. If there can be more confidence in consumer discretionary, American Express continue to see quite significant gains from here. That's an S-tier stock, right? Speaking about S-tier stocks, Google McDougall's one of those stocks. Listen, Google McDougall, this is one I've considered taking the rest of my profits on. I've already taken some profits on Google. I've considered the valuation's gotten stretched on Google. That does not mean it can't grow into this. I think it will grow into this current valuation on it, but it's definitely gotten stretched considering the growth rates of the company. They're not one of the strongest growth companies in big tech, certainly, right? Meta's a much stronger growth company. Amazon's, I think there's a good debate. Amazon will outgrow Google as well over the coming years. And then obviously Nvidia is a much faster growing company than good old Google McDougall. And then Microsoft is a question mark if they'll outgrow Google, but that's a strong debate, right? So I've considered it. For right now, I'm keeping the rest of my shares, but I have considered it. Fubo, that one's got a long way to run there. Revolve's got a long way to run there. Amazon making a nice move here today. ServiceNow continue to see some momentum, so that's good. I mean, the SaaS stocks look like they've all bottomed now. That's the good news, right? Now the question is, how long does the recovery take, right? How long do these stocks take to get back to their old highs? My guess is best case scenario 6 months, worst case scenario 18 months, right? And keep in mind, some of these stocks are never going to see their all-time highs ever again. But I do believe companies like Salesforce and companies like ServiceNow will. But it's debatable if that's like in the next 6 months or that's in the next 18 months. But I would put it somewhere in that roughly ballpark for both of those stocks. I believe both of them will see new all-time highs, right? PayPal continues to be an ATM machine of a business model. Palantir actually is attractively priced now at this point in time. You guys know what I believe about Nike. Celsius, what an opportunity. So why Celsius down big? Well, basically, looks like an attorney general, I believe it's in Texas, is looking into the company. They're going to do an investigation because their products are like colorful and, they're afraid maybe kids want to drink them and things like that. Reminds me of stuff I used to have to go through with Monster Energy back in the day when it was called Hanson's Natural Beverage. And, you have these look-ins and it's like, oh, are they marketing to people under 18 for energy drinks and these sorts of things, right? So what are they going to find? Nothing. Like, I'm no lawyer, but I know some very, very good lawyers. And I got to say, in my opinion, and if I was to ask my lawyer's opinion, both of them on this, I would say that both would say, if they had to look at this situation and say, like, what, they ain't going to find nothing. Like, what are they going to do here? Worst case scenario, they slap them with a fine, but what are you going to do? Okay, you make colorful cans. Like, are you kidding me? You flipping my flapjacks here? So it's just a whole circus, ridiculous situation, right? And so anyways, the stock fell a bunch here today on the worries of that, on the back of that. But that's the thing with Celsius. Like anything gets people to freak out about that stock, right? Costco. Costco came out with their new energy drinks, right? And I remember Celsius stock sold off because of that. It's like, oh, Costco came out with energy drinks. Oh boy, anything that happens, people will sell the stock off right now. They look for any reason. I'm just like, you guys do what you want. But I remember I had to go through all this same crap with Monster back in the day. Look-ins from state people and all this crap. Oh, market share and there's a new competitor and blah, blah, blah. All the same crap we're going through again with Celsius. But at the end of the day, these stocks are magnificent for the long term, but in the short term, it's a messy situation, right? Estee Lauder remains an incredible opportunity, anything under 100 in regards to this stock. I do like e.l.f. on a shelf, to be crystal clear about that. I do like e.l.f. better than Estee Lauder at current prices. So I believe they're both headed to 200 plus, but just do the math. e.l.f. has a better opportunity at 51 than Estee Lauder is at 76. I believe they're both going to 200 plus, right? Whirlpool's getting very interesting. That stock's down to $40. I'm kind of looking if it goes under 35, it's going to be near impossible for me not to start a position in Whirlpool. So I'm keeping a close eye on Whirl. SoFi Technologies remains an incredible opportunity. Anything under 20, I really like with SoFi. Now at this point in time, Broadcom fell on their earnings. I mean, things look fine, but all these stocks that there's been so much excitement, you just have to come in and kill it. Micron saw a pretty big downward move here today, nearly 8%. So, but I mean, with these stocks, they could move down 8%, and then Micron could go down again tomorrow, and then the next 2 weeks it could go up 28%. You know what I mean? You could see Micron go 950 tomorrow, and then Micron goes 1250 2 weeks from now. These stocks, you're gonna have to really put two in their back to get them down, and they're brutal. They're brutal to try to keep down. That's what I'll say about that. They can sell off 7%. You think if you're bearish on these stocks, you think you won, and then they slap you with a 25% gain the next week, and it's like, are you kidding me? Oh my gosh. So there will be a day when Micron stock falls and falls and falls and falls and doesn't come back for a long time. And that will happen with AMD as well. But to predict that right now, good luck. Good luck in regards to that, because the earnings are just going to be so insane for the next several years now at this point in time, right? Intuit remains a very weak stock. That one trying to stay above 300, but man, it looks like it's going to get the Adobe fate of going into the 200s, right? Meta remains an opportunity. That stock I believe that was green earlier in the trading day. So the fact that one finished red, but Meta is another perfect example of a stock that they're looking for any reason to sell off Meta, any reason. So, Bitcoin's a whole situation, by the way, as well. So just something to kind of keep in mind there. Do we even have cryptos on? I don't think we have cryptos on 1000X. Let's see. Oh, we have the ETF, but we don't have just BTC pricing, right? Nah, we don't have it on 1000X. Maybe we should get that too. I don't know. But anyway, so that's kind of a little 2 cents there. Now, if I had to buy one of these stocks for the next 5 years, I had to go all in. All my money and all my portfolio, you forced me. You're like, Jeremy, you cannot be diversified. You got to go all in one of these stocks. You can't sell it, and you got to be in it for the next 5 years. What stock would I pick? By the way, if you ever want to follow me on X, that is linked in the description area down there. You can follow me on there. I'm sure there's a lot of great comments about what stock people would buy. And then, by the way, private group's about to close for new members. So if you want to join my private group, that'll be the pinned comment down there today. It's also linked in the description area down there, but I'll put it as a pinned comment. That's access to all my course curriculums, access to the private Discord chat, access to exclusive weekly videos, see the moves I'm making, my $4 million plus portfolio, access to 1000xstocks.com, all that stuff, because we're about to close for new members here very shortly. So that will be pinned comment. And we'll send you your Steel membership cards to your house once you join us in there. So once again, that's pinned comment down there. So out of these stocks, if I had to go all in one for the next 5 years, you forced me to, the stock I would pick, it would have to be, it's so tough. You probably know the two stocks I'm thinking of, because I'm thinking risk and I'm thinking reward, right? So I want a stocks I'm going to make, likely high probability I'm going to make at least 50%, if not 150% over the next few years on, right? But also, I don't want to put myself in jeopardy of like, what if the company did really bad and got disrupted? You forced me, I gotta go Meta. I gotta go Meta. Now, Meta still is very messy right now because of their insane spend and people still don't understand about the spend, right? But that's a short-term phenomenon that will be, I think, cleared up over the next, we can call 6 to 18 months. And we're talking about owning these stocks for the next 5 years, right? The number two, and it was a very close between these two, is Amazon, right? Amazon, I think, is fairly low risk over the next 5 years. And I would say Amazon probably appreciates 70 to maybe 120% over the next 5 years. So that's my opinion on that, right? And so, yeah, if you told me, okay, you can't go big tech, pick another stock, it's between American Express and Celsius. Celsius is really intriguing because Celsius, I believe, 5 years from now is probably $100 to $200 stock. That's my belief, 5 years out, right? So if we fast forward 5 years from today, I believe Celsius will be 100 something or maybe even up to $200, right? But Celsius is pretty interesting from a risk reward standpoint because so much has been de-risked now, stocks in the 20s, right? Additionally, like they have 3 different brands now, so they're not just relying on one brand. They got Celsius, Alani, and Rockstar. Energy drinks are going to keep selling and selling and selling. Like the need for caffeine never goes away. Like it's always going to be there, right? They got the Pepsi distribution, and a lot's just been de-risked in regards to that. Like everybody's looked for every reason to possibly sell that stock, and at some point it's going to be hard to get it down anymore. And once again, this is for the next 5 years. I think Celsius is actually much lower risk than a lot of people assume it is, right? And then American Express also came to mind because American Express right now, forward P probably 15 on American Express or 17. Let me see. American Express. It's either probably a 15 or a 17 forward P on AXP here. Let's see. 17 forward P on this one, right? Company that should have double-digit earnings per share growth for years to go in the future. Revenue growth, next year revenue growth expected 7%. They probably come in more in the 8 to 10% range is my guess in regards to that. So 2-year stack expected earnings per share growth, about 32% there for American Express. 2-year stack expected revenue growth, 12%. That's probably a low number, right? Dividend yield, or not super high obviously on this one, but their payout ratio is very low payout ratio. So that's something to keep in mind in regards to American Express. But this is just a great company, just an absolutely great company. AXP, baby. Let's check out the charts on American Express. This is what you want to see from a company, right? Now, the margins have been lower recently. I think that's done at this point in time. I think you're going to start to see margins uptick in future quarters. Earnings per share is expected to increase substantially. I have no doubts in that, right? So, yeah, American Express, a buy. But, Celsius here, let me show you my projections for Celsius, and you guys can understand why I believe this stock has such an insane upside ahead, right? Oh, let me actually load my previous Celsius numbers. Where are you at? Celsius. There you are. Load data. You ready? Look at that. I mean, my base case for Celsius, right? 10% revenue growth a year, that's nothing. 2027 to 2030 with 3 brands that they have, it's nothing. You gotta, they'll probably increase price slightly on all their products each year, so you get probably a few percentage of revenue growth just from that. And then distribution, continuing around the United States, sell through, international. I mean, 10% that's easy peasy. That's a lemon squeezy. Net income growth, 20%, nothing. Nothing for a company like Celsius that's still early stage. Net income margin getting to 17%, nothing special. If we were to look at Coke, we'll look at Coca-Cola in just a moment here, and we'll look at Monster for their net income margins. But you know, we're talking about I'm going to likely get a compound. I believe I'm going to get a compounded annual growth rate on Celsius of like 40%, like 40%, maybe higher. We could be talking about 50%. You know, once again, I could be wrong. But I don't think I'm wrong on this one. I know these drink companies pretty darn well. Okay, let's go ahead and type in Coca-Cola and see their net income margins here. Look at the net margin on Coke. Almost 28%. Now, once again, I don't even have Celsius getting remotely close to that number. I have them only getting to 17% out in 2030. That's not even in the same ballpark as Coca-Cola, right? Let's take a look at the Monster beverage. Monster, much more mature company. Look at their net margins, 23%. So when you see me run a net margin of 17% out in 2030, right? That's not a crazy number. It's actually not an impressive number at all. An impressive number would be if by 2030 they could get to net income margins over 20%, right? Because then it looks like they're on their way to being a Monster type company. They're on their way to becoming a Coca-Cola type company, right? Monster, by the way, market cap is a little under $90 billion. And check out how small Celsius still is market cap wise compared to Monster. $7 billion. The whole company, right? So, yeah. Okay, what stocks did I buy here today? I bought, let's see, $89,000, by the way, before we get rolling with that. Like, there's 2 things that really scare me in the market before I share what stocks I bought, okay? The 2 things that legitimately scare me with my stocks. One is a scenario where my stock gets so richly priced that I'm like, oh my gosh, like this is going to be a dead money stock for likely the next several years because the valuation's gotten so rich, right? And that scares me. And that leads me to ultimately, you know, sell some shares, right? The other thing that scares me is a scenario where a stock is struggling so bad. The stock price, not the fundamentals of the company, but the stock price is so low, and it's been low, that I'm like, this stock is due to go on an epic run. And I start getting FOMO because I'm like, this stock is down 50, 70%, whatever. The fundamentals of the company are better than they've ever been, and they're about to get even better. And the valuation is very attractive, and I'm running my projections, and I'm getting 30 and 40 and 50% CAGRs here. That scares me because I'm like, I need to freaking load the boat on this before this stock makes a move, because I don't think I'm ever going to get it around these prices a year from now, 2 years from now, 3 years from now, right? So that led me to this big buy here today, is $89,000 buy. So what stocks did I buy? I bought these 3. Posting this inside my private stock group earlier. I bought 933 shares of SoFi Technologies, $17.13. I mean, SoFi under 20, you just gotta give it to me. I mean, come on, man. This is one I started buying when it was a single digit stock. Like, I have shares of SoFi when it was $6, right? And the fundamentals of the company have just gotten dramatically better since when I was buying it for like $6. So, I mean, incredible. It's an incredible company. Elf Beauty, I ended up buying 700 shares of Elf Beauty here today, $50.64. I mean, dude, Elf at 50? Come on. We're getting this at like Liberation Day pricing. That's when it was like $49, $50 around Liberation Day last year, right? And that's when tariffs were going crazy. And people were talking about, oh my gosh, 150% tariffs from China and blah, blah, blah. That's all been calmed down in a substantial way. And so Elf's tariff situation is much better. I mean, that company has so much growth for the next decade. It's ridiculous. And I'm like, I get to pick up this company at this price. I mean, the whole Elf market cap, I believe, is under $3 billion now at this point in time. Let's go ahead and take a little peek at the Elf on the shelf, or should we say Elf fell off the shelf. So when I bought it here today, it was likely under a $3 billion market cap, right? It's insane. So I had to pick up Elf shares. And then I did a big buy of Celsius here today. 1,350 shares I bought. I paid $27.74 for those shares. And you can, let me show you my ELF projections here. And you can really begin to understand why I'm like getting some FOMO around these stocks. Most people, when they get FOMO, it's because the price is going up so substantially on stocks. And they're like, oh my gosh, I'm missing out on making so much money, right? When I get FOMO on stocks, it's because like the stock is so beaten down and it's at such a ridiculous price. Remember, guys, when I did the $88,000 buy in one day for Meta back in like 2022, and it was like $88.94 in that particular day, or $93 or whatever it was, right? I had major FOMO going on at that particular time with Meta because I'm like, I'm like shocked Meta was under $100. This is just ridiculous, right? And I did a FOMO buy of Meta. And that's kind of how I feel with Celsius and ELF right now. I'm doing these like FOMO type buys because I'm like, this is just like, I don't know how else to explain how silly this is, right? Look at my base case for ELF. 15% revenue growth, 30% net income growth. These are not hard numbers for ELF to do over the coming years. Net income margins only getting to 10% way out in 2030, right? If you're growing top line 15%, bottom line 30%, 30 to 35 P's, easy peasy, that's a lemon squeezer. We're talking about, once again, a compound annual growth rate deep into the 30s. This is why I'm FOMO buying these stocks right now. Because I'm just looking at them, I'm like, this is stupid. Like, I don't know what other way to put it. Like, the way ELF and Celsius are pricing this year is just not intelligent. Like, it's just not. And I think we'll see that. I don't think you're going to have to wait 5 years to recognize and be like, oh, ELF was priced at $50 in 2026. That was stupid. Celsius was 20-something dollars in 2026. That was stupid. I think literally you'll look back even a year or two from now and be like, how are they selling Celsius in the 20s? How are they selling ELF at $50? Like, that's what I believe. And so that's what makes a market, right? That's what makes a market. And I think the truth will shine through in the end. Let's go ahead and react to some Wall Streeters.
Today, you do have some broadening into financials and discretionary and industrials and healthcare.
From 4 hours
And there's
ago.
money coming out of the biggest winners within the tech universe over the last month. A lot of the chip names are weak. Some of the cyber names are weak. And we can get to the individual Broadcoms and the CrowdStrikes in a moment. But just the overall makeup of the market today, what do you take from it?
Oh, I think hold your horses, one flip and flapjack a moment. Listen, the whole thing about Broadcom just hit a 52-week high yesterday. So yeah, it fell, I don't know what was down today, 14% or whatever it was. How much was Broadcom down again? Let's go to the dopamine page. You guys seen the dopamine page on 1000X, by the way? You can sort it by gainers, losers, and then we also have bigger sections here. Oh, and I got them added in another section because I'm like, I want to add more than 6 watch lists. So I'm going to have them add it so we have 9 potential watch lists here. But anyways, Broadcom is down 12.5%. It was just at a 52-week high yesterday. So 12.5% put me to sleep.
We're probably seeing one of the first of many tests of this existing bull market within tech, the AI revolution continuing on. The narrative is going to continue to be challenged this summer and into the fall as we've got these massive IPOs that are going to show up here. We've got a lot of spending and investing that has happened in both private and public markets. And I think investors are now trying to make sure that they're not caught off sides, right? There's a lot of hearkening back to 1999. There's a lot of talking about whether this is 99 all over again. And I think one of the key differences here is the retail investor is able to move a lot faster than they were back then. They're also a lot more educated on the markets than they were back then. Sure. And so I think what we're seeing is a lot of people trying to make sure that they line up on the right side. I don't think that this is necessarily indicative that we've reached the top and it's time to ring the bell here, but I do think we're going to see these kinds of ebb and flow moments throughout this year as we have these big events named and listed.
If you look on the board today, a lot of the biggest monthly winners, as I was saying, the CrowdStrikes and the Palo Altos, which even with the declines that you're seeing today, are still up near 50% over the last month alone. Everybody knows what's been happening with the chip stocks. AMD over the last month, up 53%.
Hey, congratulations all fellow AMD shareholders. Oh yeah, baby. I love it. Let's rewind now. Let's hear that again.
AMD over the last month, up 53%. Micron over the last month, up 75%. So a little bit of money coming out of those areas and finding a home elsewhere in some of those other sectors is probably a welcome sign for those who have been looking for a little more healthy looking market.
I completely
hold your horses, one flipping flapjacking moment. This is where people make a big mistake. They see a Micron, they see an AMD down for a day, down for a week, down for a couple days. They're like, oh, that was it. Time to move to the next area. You need to see these stocks sell off for like a while to be able to cast their run as done. And you cannot cast their run as done until we're roughly sure where the top in earnings per share is going to be and what year it's going to be. And with neither of those stocks, you can do that yet. As an AMD shareholder, I can't tell you whether AMD's earnings per share is going to top in 28 or 29 or 2030. We're just not at that stage yet. Same thing with Micron. Like Micron, I can't tell you for sure if Micron's earnings per share is going to top in 28 or if it's going to top in 29 or if it's going to top in 2030. That's very debatable. Once we have more clarity, then you could begin to talk about those stocks topping. But we're not getting that clarity in the short term. The earliest you're probably going to get that clarity is next year. So the death of these sorts of stocks, especially AMD, has been greatly exaggerated. Like you see one down day and they're like, oh, that's it for AMD. AMD will slap you in the face and be $1,000. And you'd be like, what? It was AMD not just 500 and we thought it was over and then it went to 1,000? Dude, like 6 months, that could happen quick. These stocks prove it over and over and over again to you, right? So there's going to be a day of reckoning for Micron and for AMD and these sorts of stocks, but this little stuff, this ain't the one. This ain't the time.
I mean, this is what a consolidation should look like. These parabolas have occurred. They have to come down a little bit and then stabilize before the next leg higher. And that consolidation is healthy because it sets up the next leg higher. I do want to draw a distinction. There's no reason that I can see to think that there's going to be a correction anytime soon, whether it's the market overall or semiconductors or technology. I think for a real correction to happen, you'd have to have a massive sentiment shift. Now, that could happen if, say, things with Iran get meaningfully worse. But let's face it, this is a market that has grown very inured to what's going on in the Persian Gulf. It's grown very inured to West Texas Intermediate being somewhere around $100 a barrel. So a consolidation is healthy, very unlikely to see corrections. But I want everybody to consider, if you, as most of us have, some of these parabolas in your portfolio, it is a good time to do some risk management, not sell the entire thing, but trim some and go into other areas. I think that's what's happening, Scott. I think that's why you see a nice outperformance today from the equal weight S&P 500 versus the NASDAQ or the Dow versus the S&P 500. Rotation is healthy, if you ask me.
And it's not like tech's having a miserable day. It's just, as I said, the areas that have gone up the most, the parabolic moves in many respects are the ones where a little bit of air is coming out. But you're getting buying today in the Microsofts. You're getting it in the Alphabets. Nvidia, which hasn't traded well at all, is up 1.5%. The gains in other areas of the market, other parts of tech over the last month so outweigh these areas. So there's not a surprise either that money would be going back. It's not like the trend is messed up by any sense of the imagination. It's just looking at chips. Maybe Broadcom initiated that last night. Maybe CrowdStrike initiated it for parts of software. But the trend feels like it's still very much intact. It just may be a little bit shifty within the tech universe.
Yeah, I agree. The trend's intact. This is a healthy rotation.
Okay, let me show you something very important. Okay, listen. Did you buy Palantir back when I was buying Palantir? It was like $7. Congratulations if you did. You made a whole lot of money, right? But for those of you that were not on this Palantir run with us, that was insane. I want to show you it, okay? So Palantir here, $7. Palantir here, $6, right? You could have picked up Palantir for $6, $7 a share. Okay, so Palantir goes on a run to $9, and then it goes down to 7 again. You think, oh, the run's done. Then it goes from 7 to where are we at here? 16, right? And then it goes down. And you're like, oh, the run's over. And then it goes all the way up to 18. And you're like, oh, the run's probably done. And it goes down to 14, right? And then it goes up to 20. And then it goes down to 16. And you're like, oh, the run's done. And then it goes up to 25. and then it goes down to 20. And you're like, oh, the run's probably done. Then it goes all the way to 28. You're like, oh, is it going to be done? Well, yeah, it's done. It went down to 25. And then it goes to 80. And you're like, oh, the run's crazy, right? And then it goes down to 67. And you're like, oh, see, the run's done. And then it goes to 118. And you're like, oh, that's insane. And then it goes down to 75. And you're like, see, you crazy people, the run was done. Silly, should have sold. And then it goes from 75 to 200. Okay? So, when these stocks are running, be very careful to assume the move is over. Because I could show you Nvidia, I could show you Palantir. When you got special companies going on a special run, they got fundamental change in their business model, which is exactly Micron and AMD's situation. Both of them have fundamental, and for AMD it's actually even better from a long-term perspective because of GPU demand and CPU demand, so they got kind of the perfect world, right? But like, don't assume like the run's over because it goes down for a few days or a few weeks or a month. Like, that's a silly game. When you got special companies going on a special run and they got fundamentals of the business model being changed, you get out of the way. At some point, the run will be over, but like, you need to feel like you got a top in growth rates, or you got to figure out where the earnings per share is going to top at. Neither of those you can do right now. The top in AMD's revenue growth rate is a long way away. And then as far as if we're thinking about like the earnings per share peak on a yearly basis, I don't know. Like, it could be 28, it could be 29, it could be in the 2030s. So we just don't have any clarity as far as that now. We just know we're going higher, right?
As Jim noted, you kind of have to have this and consolidate it and show strength in other sectors in order for it not to be a correction and it really kind of take the next leg higher. I completely agree. One thing that stood out to me yesterday was when President Trump talked about the Strait may not open until Labor Day. You know, he's setting a time frame out there, and I think that put the market in general on a little bit of weak footing. Now, we know how a lot of his negotiation tactics work, and that could start getting moved up or into the more near term.
You're gonna be flipping my flapjacks. No way, Jose. Are we still thinking like we got to make market moves based upon what Trump says? Are people new to the market? I talked about this back on Inauguration Day. I'm like, dude, if you're going to play that whole game of jumping in and out of the market based upon what Trump says, you got a lot of learning doing this game. That's a big mistake. Trump's going to come out and say this and say that every single day. If you're jumping in and out of the market based upon, oh, Trump said this, Trump said that, dude, you're lost. You're going to lose a lot of money, and you ain't going to be here to party with us. That's all.
And that becomes a bullish catalyst. But these two companies, Broadcom and CrowdStrike, I don't think they were bad reports by any means.
No, they weren't. But expectation-wise, you're in a real difficult playing field.
I mean, Broadcom just the last week was up 20%. So we're just giving that back. You had these reports come out when not only also you had the comments from Sam Altman talking about AI spending or in the budgeting of these companies correlating it to the spending. And so you had some just weak footing yesterday, and then these reports come out, and then it exacerbates some of the downside.
Hey, are you buying more Broadcom like you own it? I mean, so their revenue missed for the first time since December of 24. Their outlook was unchanged. It's not like it was, but you can't be unchanged. Your outlook can't be ho-hum in the environment that the stocks have run up in. That's just not going to cut it, as they're finding out the hard way, and you as an owner of the shares are as well.
Yeah, it has to be a real raise on that guidance. It can't just come in just below the high expectations of the guidance. It was a good report. You know, some of the things that are emerging from here is where their moat is on the TPU. You know, they have that contract with Alphabet going on, I think to 2031 it might be, but names like Marvell are starting to appear in the mix there, and you've seen that name go parabolic. Now, Broadcom, like I said, was up 20% in the last week. It's given that back. I think it was a good it's been still a great name this year. We're not buying more of it right here, but I do see a tremendous amount of support if it were to keep going. 355, 360. That's where the 200 moving average is. That's where consolidation was earlier this year. So if we did keep going and there were a real correction in the name, I think that's where you want to be buying it.
Well, the street's not giving up in any way, shape, or form on this story. Wells Fargo's bullish. They're buyers of the weakness. You got 6 target raises today. JPM to 580. UBS cut theirs down slightly, 485, but the street remains bullish on this stock, and I don't come across very many investors on this program.
Oh, exactly. Listen, that move is nothing. That move is nothing today. 12%. If people were really scared about Broadcom, that stock would have been off 30% today. 12% is nothing. That's more like, reminds me of some options activity that maybe went the wrong way, some gamma squeeze situation that went reverse, blah, blah, blah. Like, I don't feel like the big Broadcom shareholders like, oh, we got to sell now. Like, I just don't see that. That stock, if the people were really concerned, it would have been off easily 20 or 30% today. 12% off a stock that was at the 52-week high just yesterday, and they were talking about up 20%, if not more than 20% over the past week. This is nothing. Absolutely nothing.
The wise that are not bullish on this name.
That's not a stock.
I don't disagree with any of that, but I think what also factors into this that we're not talking about is the fact that you have Taiwan Semi CEO saying, we don't see any way that we're going to catch up to global demand for semiconductors anytime soon. And a lot of the excitement and the bubble that we've talked about, the run-up in chips for the last few months, has been based on this idea that the remaining performance obligations continues to grow. And it's kind of the point that I've been making for a while, that the reason this industry is so cyclical is because it takes 3, 4, 5 years to build the infrastructure necessary to actually create the chips that these companies are relying on. And so by the time they actually build the infrastructure needed to create the chips, the foundries, the demand has subsided one way or another. Either we figured out another solution and we don't need it.
Yes, but listen, let's play a little game here, okay? Listen. If you can't produce as many GPUs, CPUs as maybe you want to, ideally, right? What happens? You go up on price. And your customers will pay the price because they have no other choice. So you go up on price, your margins increase dramatically, the earnings per share increase dramatically, even if your revenue doesn't go up quite as much, but your revenue is going to end up going up quite a bit because you'll be able to charge more. If you were charging, I don't know, let's just throw out a number. If you're charging $2,000 a chip, and there's such high demand that people are willing to pay whatever for it, your customers, you go up to $3,000, $4,000, and your margins massively increase from there, right? Like, that's the fun part of this game for the chip companies right now, right? And once again, this is not a long-term lasting thing. It's not going to be like this for the next 10 years, but for the next 1, 3, maybe 5 years, it is like that. And so it's party on.
As much as we did before, or we've already gotten the supply that we needed from somewhere. And so I think that that's also what's being reflected in the response to Broadcom specifically, is this idea that, yes, the number was decent. Yes, I mean, we're talking about, 48% revenue growth year over year. That any other company reporting those numbers would be up 15% today, not down. But I think that this is indicative of that sentiment too. Where can we actually kind of stop the excitement over RPOs and actually start to be concerned about legitimate sales happening now?
Brent, you gotta like the fact that you've got an almost evenly split market performance over the last month. If you take the NASDAQ over the last month's up 7% thereabouts, S&P up 5.25%, Russell 2000 up near 5%, the Dow with its big gain today up about 5 1/3 or so, approaching 5.5% over the last month. It's hard to argue about the makeup of all of that, especially, as I said, at a time when people are hung up on the fact that yes, we do have a narrow market at the top. We get it.
Right. I mean, the narrowness is not necessarily in performance. The narrowness is the size of the top companies just make up so much of the return because their size. But that is very different. To your point, there are other sectors and other securities that are doing well. To me, what I think today is really interesting and what I've been thinking about.
I want to talk more than today, right? Today is what it is. But there's an issue. And the issue is for the momentum side of the market, which is a huge component, right? Do you have reason to move away from the chip trade right now? The answer is you still don't. You still don't. Like, it is still the play. And so if it sells off again tomorrow, like, it's still going to be the play. You're going to come running back to MU. You're going to be coming running back to AMD because the view is the stocks are going higher until, things happen like I spoke about earlier. And so that remains the momentum place to be. And which means it kind of takes the air out of everything else in the market in the short term. And obviously the IPOs are also coming, which the big dogs, Anthropic, OpenAI, SpaceX. So that's going to take some air out of the room as well. Once again, private group will be closing to new members here very shortly. So if you want to apply to join us in there, that will be the pinned comment down there. I've seen many times where this market is soaring higher, many times where we've gone kangaroo mode, many times we've gone bear market mode, right? And there's a bunch of specific things that are all happening simultaneously that's setting up for a monumental move. And I don't think anybody's prepared for it. I don't think anybody's even thinking about what this move's going to be. And we got to talk about this, right? It's not what you think, and it matters significantly. AMD, it refuses to stop. Another all-time high. Congratulations, every single AMD investor out there. It refuses to stop. $542 a share here today. Look at the public count position alone, up $1.1 million of profit. Unbelievable. Every AMD shareholder, you've done well for yourselves, right? Now, Meta stock has started to move here, right? The stock was up over 4% here today, up $524,000 on this particular stock. Is this dead money waking up? We might have to chat about that here today in this video, but there's two core subjects I want to speak about in this one here today, okay? One is I'm going to talk about this insane move that the market's setting up for, what's going to happen, how long this is going to take, where the money's about to move, the next big sectors that are going to benefit from this, all those sorts of things, okay? Second subject we'll get into in this video is I want to show you my entire public account in this video, and I want to talk about every single position. I want to give you an updated thought on AMD stock, Palantir stock, Meta, SoFi, fell off the shelf, all these stocks, okay? I want to talk about them all in this video here today so I can just give you kind of my updated opinion and where those stocks are headed from here and all those sorts of things, okay? I appreciate y'all for joining me as always. Thanks so much for being here. One thing only I need from you guys before we get rolling here. If you have not done so, just smash that like button. Hit that little thumbs up icon. That's all I need from you. I appreciate you for doing that. And to everybody that's already done it, you didn't need me to ask. Thank you for that. Make sure you're subscribed here to the channel also. We are now at, how many subscribers do we have now on the channel? I don't know. It's a lot, but I appreciate you being there and do as the sign in my garage says there. I took this picture from the upstairs of my house. They filled my entire dining table up here today. 51 private group members have hit 6 figures plus in the last 2 weeks. 12 members hit 7 figures plus in their portfolio in the last 2 weeks. Congratulations to all investors, hit new milestones out there. It's unbelievable to see. Congrats to private group members. And also make sure you guys are always nice to, I don't know if you guys know, the one that sends those trophies out is my wife. So, make sure you guys are extra nice to her, okay? It's not just like some random employee that works for me or whatever. So I hope you guys appreciate all the work she does for you because all I do is sign the trophies. She's the one that actually ships out every single one of those trophies. So just want to let you guys know that, okay? Now, if you're looking to apply to join my private group, take your investing up to a much higher level, that will be the pinned comment down there that is about to close to new members here very shortly. So if you want to get in there before we close down for new members, that will be the pinned comment down there. And we'll send you your Steel membership cards to your house as well as your membership box, which Trevor sends out. So always be appreciative of Trevor for doing that for you guys, okay? Alrighty, let's get rolling here, ladies and gentlemen. Listen. If you look at the stock market, a heat map the last 3 months is very crystal clear what you see, right? We have the AI fund category over here. Any stock that is seen as a beneficiary of AI, right, is having a grand old time, is partying, right? Look at MU just in the past 3 months. Micron stock is up nearly 170%. Ridiculous, right? Meanwhile, the rest of the market is bleeding, absolutely bleeding, right? Something is about to break. This, ladies and gentlemen, is not sustainable for the long term. It is the way it is right now, But this is not sustainable whatsoever. I want to show you some of the most impressive, the household name companies, some of the best growth companies you're going to find in the market. And look what's happened with these stocks this year, right? ServiceNow stock is down nearly 20% this year. One of the best companies in the entire stock market, down nearly 20%. And this is after last year got absolutely obliterated, right? Shopify, one of the best companies in the entire stock market. This stock has gone down nearly 29% this year. The funny thing is, companies like Shopify and companies like ServiceNow, if anything, they might actually be AI beneficiaries. And they still have gone absolutely slammed. Look at a stock like SoFi. Oh my, SoFi, down over 40% year to date. This is one of the strongest, best growth companies in the entire stock market. And 40% down so far this year. Brutal. Salesforce, Mark Benioff, one of the best CEOs in the world, proven over time, and another AI beneficiary likely long term, but what's it matter? 25% that stock's gone down this year, and that's after last year it fell a bunch as well. Look at the Palantir. Is there a stronger growth company in the world than a Palantir? This is a one-of-one masterpiece of a company. What does it have to see? Down another 6.5% here today. Down nearly 19% year to date, right? I mean, the stock's down, what, $60, $70 a share from its all-time high? And this is with a company just clicking on all cylinders, reporting just shockingly great numbers. Like every time Palantir reports, I'm like, how did they do that number? How did they do that? But it doesn't matter right now. No one wants to own that stock. Look at this one. Nike, over 31% down this year. Stock already was dead. They buried it even deeper. Like how much pain can one stock take? Brutal, absolutely brutal. Estee Lauder, say it louder for the people in the back, down nearly 25% this year. This one's all-time high was like $370. And company's numbers are all trending in the right direction. Nike as well, but it doesn't matter yet. At the end of the day, no one's paying attention to these stocks. No one cares about these stocks right now. They're buried. They're buried alive right now. That's what I would call it. Because none of these companies are dead. And all these companies I'm running you through, they're all great companies. They're the furthest thing from dead. They're buried alive. That's the best way I could put it. They're buried alive right now. Okay. Elf fell off the shelf. 34% down year to date. Oh my gosh. We're talking about this is the most exciting, best cosmetics company, beauty company you can invest in the world. And look at it. What's it got to show for? 34% year to date down. Brutal. Winning resorts. Hasn't even been winning this year. Down 14% so far this year. Celsius Holdings. Oh my gosh. Celsius is the most exciting drink company in the world, second to none. They're the number one. What does it have to show for it? 38% down. This stock's down nearly 70% from its all-time high. Nearly 70%. It's buried alive, right? I'm going to run you through more stocks. Let me just run you through one more, and then we'll take a little break, and we'll start running through more stocks. American Express. Does it get more quality than American Express? The answer is no, it does not. This is the definition of quality stock. The highest quality. If we were to have an S-tier stock for the most quality stocks in the market, American Express would be right up there at S-tier. Unbelievable. As good as it gets. And what does it have to show for it? 19% down year to date. These hits are hard, ladies and gentlemen. Hard. And these are for great companies. And so you got to ask yourself, is this sustainable? And so when I hear somebody say, market's overvalued, or there's no good deals in the market, I say, open your eyes. You don't understand the damage there is in the market. You don't understand. You haven't looked at the facts around how many stocks are down 30, 40, 50, 60, 70% from their all-time highs. And we're not talking crap companies. We're talking the creme de la creme. High growth companies. Companies with the best business models in the world. And yet their stocks are buried alive right now. They've been all thrown out. Anything of these sorts of stocks have been absolutely thrown out. That's not sustainable. That's a freak market. That's not a market that's right in the head. This is the type of stuff that happened in the Great Financial Crisis. The Great Financial Crisis, it didn't matter what your business model was. You were going down. Chinatown. Everything, right? In this market, almost everything is going down. And we'll get into that shortly, right? Look at Cheesecake Factory. This is a freak situation. We call it the freak, okay? 22% up year to date. That's unbelievable. But we'll look at outside of Cheesecake Factory in that one freak situation, and it's ugly. Look at McDonald's. McDonald's, this is the one company that good times, usually the stock does good. Bad times, the stock does good. Kangaroo times, the stock does good. It's McDonald's. Like, they're always going to put up the numbers regardless, right? And yet, what does this stock have to show for it? It's down 9% this year. For McDonald's, that's actually a brutal move. That would be like a semiconductor stock going down 30%. When you're seeing McDonald's down 9%. Chipotle. Who's been watching the channel for years? Who was the one that when Chipotle was the hottest stock in the market a few years ago, who was the one saying this stock is topping? I'm betting against this stock. Remember? You remember? And sure enough, Chipotle down, Chinatown down another 23% this year. It's already been getting obliterated. I mean, Chipotle's down way over 50% from its all-time high it hit a couple years ago when that stock was red hot back then, right? Yum Brands, Pizza Hut, Taco Bell. Who else do they own? Pizza Hut, Taco Bell, KFC, if I recall, as well, right? Yum Brands down this year. Texas Roadhouse, arguably the most well-run company in the restaurant space. It's between them and Cheesecake Factory, right? And what does the stock have to show for it? 3% down this year, right? Like, man, it's ugly out there. And so here's what it is. You know, it's like I may have had AI make me two islands here, right? And one island is just perfect water, and it's like vacation times, and people are just having the time of their life, right? And you got an island across the way, and it's just like a total war zone right now. And this is how it is in the stock market right now. The AI-related stocks, Micron, AMD, Nvidia, Marvell, Google, these sorts of stocks, SanDisk, run them all, right? They're in paradise right now. Nothing you can do to get these stocks down. They're just having the time of their life. It's never been better, right? And meanwhile, just about everything else is in an absolute war zone right now. They're fighting for their life. Not as if on a financial front, like, oh, these companies are doing so bad. No, many of these companies that's raining through are actually doing better than they've ever been. But their stock prices are fighting for their lives. They are buried alive. Unbelievable. Now, this is going to go one of two ways, ladies and gentlemen. Listen. Either the AI stocks, the MUs and the AMDs and the Nvidias and the Marvells and the Googles and all these stocks, they're going to go over to that other island, and it's going to be a war zone, and it's going to get ugly. Or all these stocks that are great companies, right, that have been in an absolute war zone with their stock prices for the last couple of years here, they're going to go join the party, and it's going to be paradise, and they're going to have the time of their life. But there's no situation where all of this just stays the same for years and years to go in the future. That's not the way this works. There's also a potential that this goes over here and everything else goes over here, right? And so all the AI-related companies eventually have a bad day. And when I say a bad day, I'm talking about a bad few years. And eventually, it's a war zone for them while everything else is in paradise having the time of their life, right? Now, the thing you got to understand about the stock market, and this is something I've experienced in my 18 years being in this game, nothing is lasting in the market. Nothing. You could have stocks, you could have sectors be the hot plays for months, sometimes even years, multi-years, right? Those runs come to an end. Nothing is up to the right. Nothing's down to the left. Wait, it'd be the other way. Nothing's down to the right. Nothing's up to the right forever. That's not the way this works. And so you got to understand when you see all these AI companies having the time of their life, this is not going to last forever. This is a party right now, and we are having a ball, are we not? If you own AMD, Micron, Google, like a lot of these stocks I'm fortunate to own, right? At least when it comes to AMD and Google, Amazon, I mean, these stocks are having the time of their life. And we just look, and it's almost like every day you wake up, and you're just like, I wonder how much money I made today. It's not even like, oh, did I not make money? It's like, how much money am I going to make this week from AMD stock? Same thing if you're a Micron shareholder. Every week you wake up, like, I wonder how much I'm going to make from Micron this week. Is it going to be 10,000 this week, 50,000, 100,000, a million? Like, I just wonder. It's not like And that's the fun part, right? Now we're in paradise right now when it comes to those stocks, while everything else is just getting absolutely obliterated. And so even, and I'll show you the public count today, I have the top of my portfolio is doing better than it's ever been. By the bottom half, a lot of these stocks are at 52-week lows and multi-year lows. And it's a long list of them. And that's the market we're in right now. It's a haves and have-nots. It's a keeping up with the Joneses type market. That's what we're in right now. But none of this is lasting. None of this. And that's the way the market moves. And you can move on to the next cycle. The thing you want to understand right now is the hot stocks, the ones that are red hot right now, they're just absolutely ripping, and like everybody can't stop talking about them. Everybody can't stop buying them. The momentum traders can't stop buying these stocks. The algos got their back. They got positive gamma squeezes going on, like the whole game, right? Those hot stocks that are red hot right now, everybody can't stop buying them, and they just seem like they go up every day. Listen, those hot stocks could become cold stocks a year from now, 2 years from now. That's the way this works. I could run you through basically every stock in existence, and I could show you, wow, it did have a 2 to 5 year insane bull run, right, where the stock just soared and made an unbelievable move. And I could show you after that a big kangaroo cycle into a big down cycle. And I could take you through every stock. I don't care what stock. We want to talk Tesla. We want to talk Apple. We want to talk Microsoft. We want to talk Google. We want to talk Meta. We want to talk Amazon. We want to talk Nvidia. We want to talk AMD. I'll show you every stock. Never fails. Never fails. Factually, mathematically, never fails. I can run you through the whole list. Every single one. And so understand what you're seeing in front of you right now with these hot stocks. A year from now, 12 months from now, 24 months from now, these stocks could be cold as ice. You might not be able to get somebody to even think about buying AMD or Micron a year from now or 2 years from now, 3 years from now. They'll be like, you couldn't sell me that stock. I want nothing to do with that, right? And I've seen that time and time again with every stock in the market. So just understand there will be a moment. We could debate, is it 6 months from now? Is it 6 years from now? Is it 3 years from now? Is it 2 years from now? Is it 1 year from now? Is it 5 years from now? Is it 4 years from now? We could debate all that. But there will be a moment when you can't find somebody to buy AMD shares. You can't find somebody to buy Micron shares. It never fails. Ever. There'll be a moment, the almighty Nvidia, you won't be able to find somebody to buy that stock. Look at Palantir. Everybody and their grandma couldn't wait to buy Palantir last year, right? As the stock continued to soar higher and higher. You couldn't find somebody to buy Palantir in 2022. The stock fell to $6. Technically, I think it was $5.94 at the lows. Palantir at that price? And then go back a year ago, hottest stock in the market, people were happy to pay $200+ for Palantir. And now, who's talking about Palantir? Who's buying Palantir stock? You can't find somebody to buy Palantir stock. Same thing with ServiceNow, Salesforce. Go back a few years ago, people couldn't wait to load the boat on Salesforce. ServiceNow stocks. Those are some of the hottest stocks in the market at that particular time. You can't find somebody to buy, I'm crazy enough to buy Salesforce and ServiceNow right now, but outside of that, those stocks have gotten wrecked. Like wrecked. Wreck-It Ralph, right? Like it's ugly. Ugly, ugly. No, the cold stocks you're seeing right now in front of you, right? Listen. Those cold stocks, a year or two from now, could be the red hot stocks. So when you look at an ELF, when you look at a Nike, an Estee Lauder, a lot of the consumer discretionary stocks, these stocks are cold. No, you can't find somebody to buy them. People make fun of them. ELF fell off the shelf. They make fun of Nike. Oh, don't speak about Nike. Same exact comments I got last year when I spoke about AMD. Who's laughing now? Oh, AMD's suddenly the hottest stock in the market. Oh, people can't wait to talk about AMD now at 500. That's funny because when it was 100 something, people made fun of it. Advanced money decimator, advanced money destroyer. You know, I mean, the amount of comments. Oh, don't talk about AMD. It's unbelievable. And then look at it. It's one of the hottest stocks. If I would have been talking about Micron nonstop, right? Let's say I was investing in Micron a year ago. Oh my gosh, you think anybody would have wanted to listen to me on Micron? Of course not. Be like, Micron, memory chip company, yuck. Why would you even think about buying that? Buy a real stock like Nvidia, right? Nvidia's made hardly anything since then. Micron's probably up 1,000%. And so you got to understand the cold stuff, the stuff that's icy right now. Just understand that could be the hottest thing you ever seen a year or two from now. And the stuff that's red hot right now, a year from two from now, you can't find somebody to buy these things, right? So that's the stock market. And it's been that way for the last 18 years I've been in this game, I can tell you that much. And you can study the time before I was in this market, it was the same exact thing, right? Now, the other phenomenon we have going on right now that adds a lot of fuel to this fire is we're about to have an IPO gauntlet, okay? You're about to see the biggest IPOs you've ever seen in history. We're talking SpaceX, we're talking Anthropic, we're talking OpenAI, and a few other big ones, like the biggest of the bigs. We're talking these companies are pushing valuations of $1 trillion, some might be over $1 trillion. Numbers we've never seen in IPO history, right? Whenever you have big IPOs come to market, it sucks money out of other areas of the market, especially momentum, because a lot of people say, I want to play the SpaceX IPO for that first day or for that first week or that first month or something like that, right? Same thing with the Anthropic and the OpenAI. My opinion on these, a lot of these IPOs we're about to see, they're not good buys anytime soon. They're going at crazy valuations because right now they can command it. And we're in the sort of market where people want to take risk on those sorts of things. And so from a trading perspective, like if you're thinking about owning it for a day, a week, or a month, could be a fair play. But I'm just saying, like a lot of those, you got to understand, you're going to get diluted like you've never been diluted before. And to the advanced people, you know what I'm talking about when I talk about share dilution. For newbie investors, you don't know what share dilution is. So all I can tell you is it ain't going to be good. Okay? It ain't going to be good for the next many years. Once again, for the first day it goes public, the first few days, first few weeks, who knows? But I'm just telling you, for the next 5 years, it might be a day to buy those sorts of stocks. But I can tell you, ain't gonna be on IPO day, baby. Not in that first month or so. So that's gonna suck money from that. There's already a theory. There's a theory, because you see how weak Bitcoin's been and Ethereum's been. There's already a theory that money is coming out of essentially Bitcoin, Ethereum, and moving into these, getting ready to move into these IPO opportunities, right? And so it's kind of sidelining, getting ready, because you're about to see SpaceX go public likely next week. You're about to see Anthropic and then OpenAI. So the thing you understand is people are looking at Bitcoin and Ethereum and they're dead. They're dead, right? There's just no activity. Like there's no momentum, there's no nothing. So people are like, why am I going to keep owning Bitcoin and Ethereum? Like I need to get ready for that SpaceX IPO. Or I need to be playing these semiconductor stocks. Because I mean, you look at Micron, you look at AMD, these stocks go up 2, 4, 6, 8, 10% a day. And these Bitcoin people are like, they used to be us. Remember when that was us? Like there used to be the days when Bitcoin seemed like it was up 2, 6, 10% every single day, right? It was a long time ago now. Bitcoin's actually lower than it was 5 years ago, right? Like I remember Bitcoin in 2021, I remember Bitcoin was like 70K. It's lower than that now. Ethereum's down a ton. I don't even remember. Ethereum, I think, was either 2,000 or 3,000 back in 2021. Now it's 1,800. Like, oh my gosh. Solana, wasn't Solana like 140 or 150 or something like that back in 2021? Now it's half that. So money's moved from those assets into, these other opportunities because they got the momentum, right? Now, this also goes to show you how fast things can switch, right? Look at Broadcom. Broadcom makes custom chips for a lot of the hyperscalers, right? Think Google, think Amazon, other companies like that, right? So this stock just hit it. This is like hilarious. It just hit a 52-week high today. Look what happened after hours, down 12%. It can happen. It can happen fast, right? Where these stocks turn. So what happened with Broadcom? Did they announce some horrible news? No. Here's what happened. They basically left their AI chip forecast as unchanged, and it sends the stock down, 12% after hours, just because they left their AI chip forecast unchanged. Like that shows you, like, if it turns the other way, it can turn quickly, right? And so you're in a situation, because these stocks have climbed so much, you've got to come in, beat both metrics. You got to beat your revenue. You actually got to beat 3 metrics. You got to beat revenue, you got to beat margins, and you have to beat earnings per share. But then additionally, you have to beat your guidance as well. And you got to do it quite substantially. And so, like, let's say an AMD. What does AMD have to do next quarter to continue this roll higher? Let's say AMD gets in next quarter. Let's say they're $600. We'll just throw that number out. Let's say AMD going into next earnings $600, right? What's it going to take for AMD to go from $600 to $800? They got to come in, smash revenue, smash margins, smash earnings per share, and have a guidance significantly above where Wall Street's at. You got to do all that. And then potentially, if you got year out numbers, you have to take those out as well. So a lot of things you got to do, but that's just like when you're talking about your valuation continues to get raised and raised and raised, the expectations continue to go up. I tell you guys all the time, it's like a straight A student. You got a straight A student, they got to come in with A pluses. They don't come in with A pluses. You start looking at them and you're like, what happened to you? You're not studying hard enough? Like, what's going on here, right? That's the situation we have at hand, right? So here's my opinion on what happens from here. Okay, listen. Money could start to move heavy into the beaten down stuff after we get through this IPO craze we're about to have happen here over the next, we can call it 3 to 7 weeks, roughly, right? You'll start to see money move into the beaten down stocks that are great stocks, but they've just been beaten down, right? No, I think there's a high probability the S&P will struggle in the next 3 quarters, right? And at some point in the next 3 quarters, the S&P will go through a very rough patch. Probably after the IPO hype fades, and then there's going to be a weird situation that's going to happen in the next 3 quarters, okay? And it's what I call a no way out situation, okay? Because the semiconductor stocks are running so heavy, and let's assume they continue to run in the short term, the next month or two, right? The issue we're going to run into is you already see Google's, just raised a bunch of money. I think it was 85 billion this morning, roughly, they raised, right? So now these companies are not only spending all the money they have coming in, but now they're going to start spending on CapEx money that they're basically raising. Holy smokes. That's when we start to talk about the scary part of the cycle. It's one thing if you say, okay, we're going to have this much money coming in. We're going to spend all that money on Nvidia and AMD chips and Broadcom chips and these sorts of things, right? It's another if you've got to start raising money plus spending all the money that's coming in through your door. Now that starts getting scary. And that's the stage we're starting to go in at this point in time. And so I see no way out. One is eventually people are going to stop wanting to own the Mag 7s because they're just spending so much. Maybe Apple gets a pass, but all the other ones basically would say, this is just ridiculous. Like, we don't feel comfortable owning any of these particular stocks because they're starting to raise money on top of spending everything they have, and it's getting just out of control, right? That's one situation. The other, and so that's a no way out situation. But then the other no way out situation is then you start looking and you're like, this is not sustainable. So these chip company numbers are not going to be sustainable past maybe we can call it 24 months out. And then no one wants to own the chip stocks after that point in time, because then they say, well, if this is as good as it gets over the next year or two, I don't want to pay these sorts of prices anymore, right? And so no one wins. Then it's just like big tech's the enemy, and people hate that. And then people also simultaneously will hate the chip stocks because they'll view it as like peak margins in the next year or two, peak revenue, peak earnings per share. And then we got a down cycle ahead, let's say starting in 2028 at some point in time. So that's no way out. And that's where the S&P 500 runs into trouble, because then everything big goes. So that likely happens in the next, I would say, in the next 3 quarters. At some point in time in the next 3 quarters, you'll have a big downfall. Now, don't assume that's the end of the chip run. That's where people will make a big mistake. They might assume, let's say 3 months from now, we start a major correction in the market, right? And for that next 3 months, the stock market just plummets. Let's say we have a 2018. Let's just throw that out there, okay? The market just plummets. Let's say it's even worse than that. That does not mean that necessarily it's game over for AMD or Micron or those stocks. They can still have another huge run after that. No different than you look at Nvidia. Nvidia had that monstrous run in 23 and into 24. Then we had Liberation Day and the tariff drama in 25, right? You could assume Nvidia's done. No, it still ended up going on another huge run after that, right? And so understand, don't think and assume that AMD, Micron, and all those stocks run is over. It could be, but it might not be. I would say the higher probability is probably actually not over at that particular time. There'll probably be one last major, I would call it last hurrah run that we'll have after that point in time, right? But you got to understand when the SP 500 goes through that situation, where's that money going to be going? Because you'll see selling pressure and it'll hurt the market on the surface level, but where's that money going to be going? It's going to be going into a lot of the beaten down crap, consumer discretionary at that point in time, right? And that will be very interesting because we'll there'll be a lot of consumer discretionary stocks having a party. And meanwhile, you have the S&P 500 weak, and a lot of the top stocks weak, and people will be like, what? Like, and so it'll be a weird time, because those of us that maybe have positioned and are positioning into a lot of these stocks that are beaten down are going to have so much fun, and we'll be talking about the fun, and people are like, how are you guys having fun? Have you seen the market lately? It's crap, right? And so kind of like right now, guess what? If you look at the very top of the market, the S&P 500, the NASDAQ, you think, oh my gosh, this is the best stock market ever. Everything's going up. Everything's got to be beautiful. And then you all of a sudden look beneath the top 10% of stocks, and you're like, dude, this is a war zone. You look at Bitcoin, you look at Ethereum. It's like, no, everything sucks. Real estate sucks. Everything sucks outside of the few shining darlings of the biggest stocks in the market, right? So that's a whole game that's going to play out, and it's going to be very interesting. It's going to be weird. It's going to be awkward to go through. It's going to be a situation, right? I was even looking at a stock like Netflix, right? Netflix used to be, I mean, this was a darling of Wall Street. They loved this stock like they never loved a stock before. Oh my gosh, was Netflix a love stock. And yet, Netflix stock is down 32% the past year. You can't find somebody to buy Netflix. I mean, the stock just goes down and down and down. Did Netflix business model magically change? Did AI disrupt them? No. But it's been left for dead. Even a Wall Street darling like Netflix. Who would think that, man? Who would think that? Netflix, I even heard somebody talk about Netflix in on CNBC or Bloomberg in it seems like forever. I swear they used to be one of the most talked about stocks. It seemed like every single day on CNBC and Bloomberg. But does anybody talk about Netflix now? No. Not because Netflix doesn't exist or they're not relevant. No, they're doing better than they've ever been, actually. But because everybody can't stop talking about big tech. Like the biggest big tech, really, and chip stocks, AI beneficiaries. That's where all the talk is. Chips. That's where all the talk is. Marvel, right? Oh, and Jensen coming out, yesterday, talking about Marvel's the next $1 trillion company. That's a big subject today. And now these IPOs, that's where all the focus is. Netflix? Oh, we forgot about that company. Netflix, oh yeah. I remember we used to talk about that company every day on CNBC and Bloomberg. Oh yeah, Netflix, that one. What happened to them? Oh yeah, they're better than they've ever been, actually. Oh, but their stock price sucks. 32% down the past year. That's the sort of market we're going through right now, right? No, you gotta understand the decade we're in right now, right? If I got started at the end of 2008, right, going into 2009, and there was an interesting decade because I studied that decade prior to me getting in, right? And when I got in, it was a great financial crisis going on. The market was crashing. It was a whole mess, right? But if you look at that decade, 2000 to 2009, it was a decade really that had momentum moves and crashes, right? It would have these areas of the market that would be complete momentum, and then it would have crashes. And so, for instance, like housing had huge momentum for a bit during that decade, right? And those housing stocks were just rolling. Finance was rolling for a particular time. The banking stocks were just going insane for a particular time. There's so much financial engineering and sketchy stuff they were doing, but it was like that was the play for a particular time, right? The tech bubble obviously popped during that particular time. You also had the great financial crisis. So it was really a decade that I would call momentum and crashes, right? And so then there's my first full decade investing in the market, right, which was 2010 to 2019. Now, 2010 to 2019 was really an inclusive uptrend. There was a market where, some companies way outperformed others, right? And you think about companies like Apple and Google and those sorts of companies that were at the forefront of the mobile revolution. You think about companies like Amazon and a few others that were the cloud-based companies, that Microsoft that really benefited huge. And like some of those companies, like, wow, game changers, right? But overall, I would say it was an inclusive uptrend. Like most stocks out there did very well in that particular decade. It was a very healthy market. The breadth on the market, meaning like most stocks were doing very well, right? It wasn't like, there's only a few stocks doing well and the rest of the market sucks. No, it was an inclusive uptrend. It was a very healthy market, and it was a market that most stocks you can make money in. It felt like that, at least, right? It felt like that. You could buy a small cap and make money. You could buy a mid cap and make money. You could buy a big tech and make money. Certain stocks did a lot better than others, but there was opportunities all over the market, and you got an inclusive uptrend. Now that leads us to this decade we're in. We're in a decade very similar to this one. This is a decade that's going to be marked by momentum and crashes. And, I've been talking about this for years, but you've already seen it. 2020, you've already had two 30% plus crashes in the NASDAQ in this decade, right? You had 2020 crash and you had 2022. Both those were way over 30% NASDAQ crashes. You've also had big corrections in the NASDAQ as well. Correction kind of meaning like 20% plus down for the NASDAQ, right? And then you've had these momentum runs where certain stocks just go absolutely ballistic and make these unbelievable moves. And so we're in a momentum and crashes decade. And don't be surprised if we get another big crash in this decade. I would say high probability we have another major crash in this decade, where you see the S&P 500, you see the NASDAQ go down 30 to 50%. High probability, I would say, in this decade. And it'll be the decade that's marked by momentum and crashes, right? And so, anyways, by the way, picture of me, 2014, there I am, baby, okay? Let's look at the public account. Let me talk about each of these stocks. Here we go. This is a full public account here, okay? AMD is a big dog position here at a $1.1 million gain now at this point in time. AMD continues to be the play, right? And it will continue to be the play until it's crystal clear where the numbers are going. Right now, the numbers are about to get so insanely good for AMD over the next year or two that it's just, we don't even have clarity. It's just, we know it's so much better than anybody anticipates, and that's exciting, right? And so AMD probably tops, it's tough to say. I would say likely in the next year, best case scenario, maybe in the next 2 years from a stock price perspective, numbers probably peak 3 to 5 years out. That's my opinion in regards to AMD. So party on with AMD. Metastock, this one still is murky. And the reason it's murky is because we just don't know where Zuckerberg's taking the spend. He's increasing it so dramatically. And until we can see definitively where this money's being spent and how much money they're going to be able to make from all this money they're spending, we can't. It's just a stock Wall Street's not going to be able to trust. And so it's going to have these like stop starts where Meta's going to be back. It's going to be moving. And then it just goes right back down. And you're like, you kidding me? So once we have clarity from Zuck on longer term spend and we have clarity from like how much money could they actually make from this, you'll see Meta go to 1,000 quick. But we got to get that clarity. Until we get that clarity, dream on about 1,000. But once we get it, you'll see 1,000 quick. Amazon, amazing Zon. This stock continues to see momentum. It will continue to see momentum. Yeah, they're spending a fortune, but at the end of the day, Amazon is going to be one of the biggest beneficiaries of the AI wave because of AWS. It's clear, it's crystal clear. And then e-commerce continues to build and their advertising business continues to be phenomenal as well. That one will continue to see momentum, unless you're in a market crash or a correction or something like that. Cheesecake, it's a freak situation. That company's clicking on all cylinders. They've got two major growth engines. Those two growth engines for the company are going to become a bigger and bigger part of the base as the years tick on, which is going to help revenue growth accelerate, earnings per share accelerate. They're just a company that puts up their numbers, right? CRM, Salesforce, as more and more people understand the agentic opportunity, you'll see momentum come in Salesforce. Nike, things have already turned there. People just haven't recognized it yet. That's going to be one of the biggest beneficiaries, consumer discretionary, once those stocks start to move. Nike will be one of the first they go back to. When consumer discretionary becomes a play, Nike will be one of the first Wall Street moves to. They love that stock deep down. They've hated it the last several years, but trust me, just watch. You'll see Nike double like that, and you'll be like, double? Like that? It'll like double like that. American Express, that's another super quality name. They're going to come back to that one in droves when they're ready. Same thing with Estee Lauder. ServiceNow, once everybody understands the agentic opportunity, Salesforce and ServiceNow will move huge. My guess is ServiceNow will move further to the upside. Salesforce is just a safer one on the downside. Palantir is actually attractively priced. What happens with their stock price short term? I don't know, because the problem is if growth rates are kind of peaking right now, it gets tougher for growth stocks if your revenue growth rate is slowing, and that might be what Palantir is about to move into, and that makes it a little tough. But I think actually Palantir is actually interesting as a buy, and I haven't thought that for the longest time. Celsius, huge buy on this one. That one's going to be $100+ stock long term in my opinion. Honest exits this year, $5 plus regardless of market conditions. That's my opinion, right? PayPal, they need to be bought out by somebody. Like, that company is just a profit machine in ATM, but no one wants to buy the stock, right? SoFi, one of the best growth companies in the world, especially when it comes to finance related. That stock should be way over $20 right now. And eventually it's going to be a $50 plus stock long term with the potential of being a $100+ stock. Google McDougal, that's one I worry about a bit. Google's gotten stretched here. and they're spending like insane. Now they're starting to raise money to spend. I'm worried about Google stock price more than I'm not worried about the company. Like, it's Google, they're gonna put up great numbers, right? I'm worried about the stock price. Revolve, one of the most underrated stocks in the stock market. That stock should be $30 plus today. Elf on a Shelf's going to 200 plus long term, in my opinion. Fubo, spec, we'll see what happens. Things are looking much better for Fubo overall. Love it. And once again, if you're looking to join my private group before we close to new members, do so with the pinned comment down there. Click on that, fill out a form, see if we can get you access to all my courses. Become Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuation Mastery, teaching you how I value stocks, right? You want access to 1000xstocks.com, exclusive weekly videos. I just recorded my private group video yesterday, teaching some very important subjects, right? Or was it Monday? I recorded that. Also get access to see the moves I'm making in my $4 million plus public count, all that good stuff, pin comment. After we get done going through that, if you are anybody that owns Estee Lauder stock or ELF stock, I have some very good news for you guys in this video here today. We will discuss that. Then we're going to talk about SoFi stock. I have some good news for SoFi shareholders out there and what's going on there, okay? After we're done going through all of that, then we're going to react to this video here. We could see some of the biggest stock market gains in our lifetime after 2026, says Tom Lee. That's a big statement. I'm looking forward to reacting to that one. Dan Nile, he's talking about you can have an irrational market and still have a long way to go. I'm looking forward to reacting to that little clip there. And then I want to react to this one, Meta stock. A lot of people look at this as like, my gosh, it seems like too good to be true, right? Like the stock is beaten down. It trades at very low forward PE. The growth rates are insane, 30% plus revenue growth, right? And it's like, what is going on here? So I thought we'd spend a moment talking about Meta stock in this video, and if that's an incredible opportunity. Okay, I appreciate y'all for joining me as always. Thanks so much for being here. One thing only I need from you guys. If you have not already done so, just smash that like button for me. I appreciate y'all for doing that. I appreciate you for being subscribed to the channel and all that good stuff, okay? Alrighty, ladies and gentlemen, let's talk AMD. Another closing all-time high here today, $521, right? So it's been an unbelievable run from 200 to 500, right? Unbelievable run. Couple things to keep in mind here, right? Before we talk about selling the stock and those sorts of things. Couple things to keep in mind. One is, it's not like a run like this has never happened before, right? Look at MU's run. MU, Micron, like that seems like that wasn't that long ago. That stock was $100. A matter of fact, it was $100 in the past year. And, you know, it's over $1,000 right now, right? You know, obviously SanDisk was a whole different move. That was like a 3,000+% move in less than a year, right? Nvidia's gone on several runs where it would double up, triple up quick, right? And so just understand, this has been a great move for AMD, a big move, right? And, you know, I'm sure there's a lot of you guys watching this video right now, you've made tens of thousands of dollars, hundreds of thousands of dollars, or millions of dollars in AMD, right? Congratulations. But don't think this, like a move like this has never happened before. I mean, this is actually kind of small move compared to some stocks I've had that made over 2,000+%, right? Tesla and Palantir definitely come to mind. Even if you compare it to Meta's move, you know, Meta was $88 2022, and then last year at the peak, Meta was pushing close to 800. So this has been a great move for AMD. It's just, this, it's not like this has never happened before. This is crazy. Like, this is an epic move. It's great, but I wouldn't even call it legendary. The run MU's had, Micron, has actually been a legendary run, right? From 100 to 1,000 plus, that's a legendary run there, right? Now, in regards to selling, right? You have individuals like this individual, right? They sold their position, citing deterioration margin of safety, suboptimal risk reward after AMD's sharp rally pushed 2028 PE to 37 times gap. Listen, man, we don't have any clue where AMD's 2028 PE is going to be, right? We know it's going to be likely dramatically better than what this individual thinks, what I personally think, and what any other analysts out there. I would go on a limb and say it's going to be better, right? Given this crazy CPU demand that's about to happen over the next 2 to 3 years, and the GPU demand for AMD over the next 2 to 3 years, I think every single person's estimates, including Lisa Su and AMD's estimates, are far too low for the next several years, right? And so that's something to keep in mind there. Don't even look at like, oh, 2028, 37 times gap, PE ratio, no, it's going to likely be way better than what you think, right? The proceeds are being allocated to Nvidia, which offers clear growth trajectory at lower forward multiples. So yeah, that's fair, right? Listen, Nvidia offers you a more clear picture in terms of growth, right? But here's the issue when we're talking about stock prices and why AMD's stock price will continue to significantly outperform Nvidia. Listen, let me explain this. AMD's stock price is in a great moment right now because we know things are going to get so much better, but no one knows how much better. We just know it's a lot better than anybody anticipates, given the CPU and the GPU demand for AMD for the next several years, right? That's very exciting. And that makes the stock have to go higher because you know it's just getting dramatically better than anybody anticipates. Nvidia doesn't have that picture. Nvidia has a clear picture. Nvidia, we know roughly what the growth rates are going to be this year, roughly what they're probably going to be next year as well, right? There's no shock and awe that's going to happen with Nvidia. It's just come in, beat the numbers a little bit, bow. That's the quarter after quarter after quarter until eventually this AI cycle ends and then it'll go the other way, right? But that's Nvidia right now. Nvidia, in terms of the stock price, being very exciting. Like when the stock did the 10x, 15x, whatever it did in a matter of 2-3 years there, that was very exciting time for the stock price because we knew the numbers were just going to get so much better. We just didn't know how much better, right? And everybody kind of underestimated like how much better it was really going to get. Like most people didn't see Nvidia going to a $5 trillion+ market cap, right? And so with AMD right now, we're pushing close to a $1 trillion market cap, roughly somewhere around there. And now the question is, like, are we going multi-trillions? Are we going up to Nvidia ranges, right? We just know it's a lot better than where it's at right now. And that is very exciting from a stock price perspective, right? Dangerous to buy into a stock that's in that cycle because, usually valuation's rich, but it's very exciting times. I mean, Palantir was a good example. Palantir, that stock was $6 in 2022, and then it ran to 60 over the next couple of years, like 10x. It's unbelievable. And you might have looked at Palantir and said, this is ridiculous. The stock's trading, so rich, blah blah blah. Stock's still had a lot more upside ahead. We didn't know how much upside ahead, but we knew it was going to get a lot better, right? And it got a lot better. It got a lot better. And so that's the situation with AMD, and that's why the stock price is so, I think, exciting right now, and it will continue to be just very exciting stock for at least the next year. Eventually, AMD will, be a more clear picture in regards to revenue, in regards to earnings, but that's probably 9 to 18 months away. So just keep that in mind, right? And that's why I talked to you guys and I said, there's a potential in AMD stock goes to $1,000 plus this year or next year. And it gets a lot of its gains already. It just runs through them because that's what stocks do. They price in the future, right? I do not think the company is bad or that the case has gotten worse, but the margin of safety here is substantially worse than it was before. And much worse on a relative basis. The impression I get is the market discovered AMD's potential now and started making calculations if the company were going to continue delivering positive surprises and even capturing market share from Nvidia, right? Now I push back against that. AMD's what? $1 trillion market cap or a little less than $1 trillion market cap. Nvidia's, $5 trillion plus market cap. I don't think anything's been priced in regards to actually capturing market share from Nvidia now at this point in time. I do not think that is a situation whatsoever. Hold your horses for one flip and flapjacking moment. Now, the other thing I'll push back on here, and I think this matters significantly, is the point about the risk reward is worse now, right? Specifically talking about the market has now discovered AMD's potential, right? The margin of safety here is substantially worse than it was before. Listen, that's very debatable. Here's the deal. If you look at AMD, and let's say AMD a year ago, okay, for instance, AMD's was riskier because a lot of us, myself, maybe some of you guys, we saw the massive potential for GPUs, specifically the 450 series and future series, right? But we didn't necessarily have the clarity a year ago about all these deals that have come through really in the last 6 to 9 months, right? From all the big dog companies. Now that's clear. So now we know AMD's GPUs are for real, right? And they're going to sell like insane. Additionally, we didn't know at that particular time how crazy the CPU demand is about to go, right? We thought like it might be a lot better than people anticipate, but now we're talking about a potential of 1 GPU to 1 CPU ratio when it used to be 1 to 4 or 1 to 8. I mean, that's a game changer for AMD and what they're going to be able to sell in the prices they'll be able to get and the margins they're going to be able to get. Now we know that. So you can say, well, the market cap's increased a lot. Sure. But we've got a lot more certainty. We now know for sure GPUs are going to sell like insane for the next several years for AMD. And the CPU business, we now know for sure, is going to be dramatically better than anybody anticipated, myself, Lisa Sue, any other bull on this stock. That matters significantly, right? And so AMD, it's in the run from 200 to 500 has been insane. But I'm just saying, like, when stocks go on a run, you're going to understand the run could go for a long time, like a very long time. Micron, when it went from 100 to 500, that was like, oh my gosh, like can't run anymore. It just went from 500 to 1,000 plus like that in a blink of an eye. Like I remember, wasn't it just like a few weeks ago or a few months ago, Micron was 500 and it was like, whoa. And then it went 500 to 1,000 like that. And now people are looking at Micron saying it's going to go from 1,000 to 2,000. Like the moves happen quick. And so, just understand, like, you could sell today at 500. And I'm not saying it's a bad price to sell at. That could be fair, right? But just understand there's a potential AMD could run from 500 to 1,000 in 2 months, in 3 months, in 6 months, right? And, you miss another 100% gain in a 6-month span. And you're looking and you're like, come on, man, I just missed another double up. And double ups, double ups are not necessarily easy in the market. They're also not the most hard thing. But when you get those double up opportunities, man, they're game changers for your long-term returns. And that's something important you got to keep in mind in this game. For your long-term returns, those double up situations are monumental. You got to ask yourself this. I think this is a good place to kind of close this AMD subject. And then we'll move on to ELF stock, we'll move on to SoFi, we'll move on to, reacting these Wall Streeters and whatnot. But I want to give you one last frame of mind. If you had to say, what's a more probable scenario for AMD stock in the next, let's call it 18 months, okay? In the next 18 months. We're not talking about the next 18 years, the next 18 days, the next 18 months. What's a more probable scenario? That in the next 18 months, AMD stock is cut in half and goes down to $250, or it doubles up and it goes to 1,000. What do you think is a more probable scenario in the next 18 months? I'm going to go out there on a limb and I'm going to say, I would put, if I had to put odds on it, I would say there's a 90%, I would say there's a 9x higher probability that AMD stock goes to 1,000 plus in the next 18 months than to 250 in the next 18 months. 9x higher probability, okay? That's how dramatic. So that's also always a good frame of thought to think whenever you're making an investment. What are the chances I double my money? Remember, you're buying individual stocks to hopefully do pretty darn well, right? You got to always think, what are the chances I double my money on the stock? What are the chances I lose 50% on the stock, right? In an AMD situation, like even at 500, I just think there's a dramatically better probability the stock doubles from here over this next bit of time than loses 50% from here, right? So just something to keep in mind. And, just because it runs to 1,000 doesn't mean the run's also over. That's the other thing to remember, right? It could run to 1,500, it could run to 2,000. And so that's kind of the way I think about this game. And when the run is over for AMD, it's not necessarily going to crash right away. That's the other important thing. A lot of people think, like, when the run ends, whatever price it is, 521 today, 1,021 whenever, right? 1,500, 2,000, 3,000, whatever the price is. when the run ends. They automatically think right away it crashes. It's not necessarily the way it works. It could have a slight fall, that initial coming off that blow off top, maybe it falls 10, 15%, something like that, right? And then it could have a long period where for a year or two, it just kind of kangaroos up and down, but just kind of stays in place. And then after that, a big crash could happen. So, why is AMD stock in a crash right now? Give me your case. It's not. They're at the very beginning of their business absolutely ballooning for several years. So there's not a case that could be made right now for AMD stock to crash 50%. You say, oh, what about a 10, 15% move? That's nothing. In semiconductor companies, put me to sleep. If AMD stock was down 15% tomorrow, it's irrelevant. But whatever. That's semiconductor stocks. Semiconductor stocks are crazy. I mean, stocks in general are crazy, but especially semiconductor stocks. So if AMD was to fall, 15% over the next week, put me to sleep. It's nothing. If you got to worry about a fall in regards to semiconductor stocks, we're talking cut in half. We're talking a 50% plus downfall, right? And when's AMD going to fall 50% plus? No time soon. There will be a day. It will have its day. But it ain't today. It ain't tomorrow. It ain't this year. Probably ain't next year either. But it will have a day in the future, right? And so it's really a fearless stock right now. Everything's going to get dramatically better than anybody anticipates. CPU demand and the GPU demand is insane for the next several years. They got all the big clients you want to have. They have pricing advantage in the marketplace, right? They're going to have margins increasing dramatically, EPS increasing at a way faster clip than anything we're going to see on the revenue side. So, for me, it's not a hard stock to hold right now. It's not. I'm up several $1 million on the stock, and I just have no ambition to sell this stock right now. There will be a day when I start to cash. Maybe it's later on this year. Maybe it's next year. Maybe it's 2028, right? I will have a day I start cashing AMD shares. As I cashed all my Tesla shares, as I cashed the majority of my Palantir shares last year, right? There will be a time when I'm going to sell a massive chunk of AMD, and I will pay my big fat tax bill on that. But ain't today. It ain't today. Okay, next up here, let's talk ELF stock, EL stock. I have some great news for you. Just in the past hour or so, Ulta Beauty earnings came out. Ulta Beauty said net sales increased 11.1%. Comparable store sales increased 5.3%. That's the very key number to keep in mind right there. Comparable sales increased 5.3%. Okay, that's great news. And net sales increasing 11% in general, that's great news, right? And so this is very exciting. Very exciting for ELF stock, EL stock. Keep in mind, guess two companies that do a lot of business with Ulta. EL and all their brands, right? They have a lot of different brands in Ulta stores. And then ELF, both those brands alone take up substantial space in Ulta stores, right? And also Ulta sells online as well, so do keep that in mind. But these numbers are really strong, way better than last year, right? Last year at this time, comparable sales were only up 2.9% versus 5.3%. So if anything, I would look at it and I would say the makeup category, the beauty category is increasing. It's getting better. It's not getting worse. And so gross profit increasing at even a faster clip for Ulta is also good for the company. So I like that. I also graded their income statement. Ulta is a really good company, by the way. One of the few physical retailers that's actually interesting, right? But I graded their income statement here as B plus grade. Gross profit, so cost of sales was down a little bit on a year, actually quite a bit, 100 basis points on a year-over-year basis. Gross profit went to 40.1% from 39.1%. That's good. SG&A was a one trouble spot here. That was 25.8% of the company's revenue versus 24.9% in the same quarter last year. So operating income didn't increase nearly as dramatically as you would have hoped, right? So, it was barely up versus previous year when it should have been up dramatically more given how much gross profit was up, right? So, but all in all, it was still a very good grade for Ulta, B plus grade, nothing to be ashamed of there. But that's really good news for EL stock. There's really good news for ELF stock. And so, listen, ELF on a shelf. If there's a stock we need some dang good news on, right, it's ELF. This has been I think in regards to that stock, it's the best generational buying opportunity. I've seen ELF since I was buying it back in 2019 for $7 a share, right? But outside of that, this is the best time I've seen to be a buyer of ELF stock. We have a lot more clarity on the tariff situation now at this point in time, right? I mean, I think it's crazy that stock's selling at 52. Like, whatever. And so ELF stock, EL stock, they'll be going a lot higher. Is it a lot higher tomorrow? We'll see. Both of them should be up substantially tomorrow, and both of them should honestly be up substantially between now and year end. Like, ELF's 52 right now. That stock should exit this year. Should. That doesn't mean it will. But it should exit this year between $80 and $100 a share. EL stock's at 83 right now. That stock should, doesn't mean it will, but it should exit this year at 120 plus. We'll see. We'll see, right? SoFi stock. I got some good news in regards to SoFi stock. Okay, listen. If you're wondering why did SoFi go from 30 plus down to 15, right? It got cut in half. A lot of that had to do with, obviously, worries about treasury yields going higher, inflation going higher, right? Leading the Fed to not lower rates, potentially raise rates, leading to a very ugly, bad situation, right? And meaning very bad consequences for somebody like a SoFi, right? Yields are falling. The kind of irrational fear about inflation is going to go crazy and all those sorts of things, it's starting to die down. And so if you continue to see treasuries, keep an eye on treasuries. I'll put it to you like this. If the treasury yields go down over the next 3 months, SoFi stock's going to go up over the next 3 months. But that's just simple as that. It's as simple as that. So treasury's going down. Think of that as good news for SoFi. Let's react to some Wall Streeters.
Officer of Fundstrat Capital, as well as a CNBC contributor. Tom, welcome. I don't know if you heard me talking. I don't need notes to talk about you because you're on
Cheers.
A lot, and I remember what you say.
Before we get into these Wall Streeters, by the way, if you're looking to apply, join my private group. Get access to all my course curriculums, private Discord chat, 1000xstocks.com, all that good stuff. You're going to want to do that ASAP. That will be the pinned comment down there. We are going to be closing that down to new members very shortly here, okay? We're going to take a nice, big, long summer break in regards to new members in the private group. So that will be closing shortly to new members. So if you're somebody that needs help, you want to join a group of a lot of high caliber people, 6, 7, 8 figure plus investors, that will be pinned comment down there. Fill out a form, apply to join us in there before we close it down to new members.
To sort of set the stage for what we're going to talk about, in the past, you've made some calls that people should never make. Like, it's going to be a good inflation number on Friday. S&P is going to be up, 8% this week. And a lot of times it was borne out. And you've got a reputation for being fearless that way. The most recent thing that you did, which came through, and it doesn't really show it that great on that chart right there, but for the year you were bullish, and we were going along quite nicely till the war, and I remember it was almost a mini Liberation Day sell-off, not quite as bad, but pretty steep, and you said it's already done, and by the end of this month we're going to be significantly higher. And it was right in the midst of things hitting the fan. Not only did that happen, we took off in April, just like you said, a complete victory lap. And we've got so many people that come on here that have no idea.
How much sucking up to Tom Lee do we need to do here?
Near term or long term, and it just contrasting, what you do so well from time to time. You can't do it forever, though, Tom. You're going to be wrong one of these days, but you're right again this time.
Yeah, well, yeah.
I mean, all due respect, I watch Tom Lee all the time, right? And I see he's wrong a lot. Like, in all due respect, he's off a lot. He can be right, definitely a good chunk of the time, but I don't like when we try to make out like, oh, yeah, everything he says comes true. That's not true at all. Like, I've watched Tom Lee clips, have been reacting on this channel. When did I start this channel? 2023? I think it was I started this channel. I don't know. I started this channel many years ago. We've reacted to Tom Lee, oh my gosh, a million times. Tom Lee follows me on X as well. And, he's right a lot. He gets a lot of calls right, but he gets wrong a lot too. Like let's not act like, oh, everything Tom Lee is no different than me, right? Like, I'm fortunate to be right on a lot of stocks. Some stocks I'm wrong on, right? Some stocks I end up selling for losses. Like, you're not going to be right 100% of the time. Let's not. I hate it whenever somebody's framed as like, and it's like almost comes across as like they're always right. No, we get things wrong, like everybody does. Warren Buffett does. Like if Warren Buffett gets things wrong, I'm gonna get things wrong. If Warren Buffett gets things wrong, Tom Lee's gonna get things wrong. Like no one's bats 100% in this game.
Thank you, Joe. I know it's been a tough market for folks. I mean, I'm not surprised. We were kind of expecting 2026 to be a year where turbulence could happen and people would see head fakes. But there's still some really powerful tailwinds for America. One is, of course, the AI story. And now we're learning about the energy independence, right? America can deal with high oil because we're not going to have a shortage of it. And then there's further tailwinds coming because as AI moves downstream, it's really benefiting American businesses. I think that's why S&P earnings came in for just the first quarter $10 higher. That's $40 for the year. And if you just put a 20 multiple, that adds 800 points to the S&P. So I think there's a lot of grounding for why stocks are able to recover. But again, I think we still might have challenges between now and December. So I think everyone still needs to be vigilant, but generally bullish.
What did you say about the next 2 or 2.5 years being some of the best market activity that we've ever seen? You still feel that way? And that was not on this show. You said it somewhere else. But what is your forecast for the next 2 years, and what's it based on?
Well, I think a couple things are coming together, Joe, that are going to really support a few things that may only happen like once in our lifetime. One is I think the U.S. economic growth rate is actually starting to step up. In other words, we could grow at 4%, and for a mature, largest economy in the world to start to accelerate growth, that's pretty astounding. The second is the U.S. is one of the biggest exporters of the most important tool in the next 10, 15 years, which is AI products. And that means we are a net, essentially, exporter of a high-value product. And there's so much capital, I think, misallocated today because so much of it is held in private alternatives, but it's going to move into the public market. So I do think that, plus the demographic tailwind of millennials and Gen Z adding to the workforce, but then also beginning to inherit generational wealth. I think that is going to set up for after 2026, perhaps, over the next 2 years, some of the biggest gains of the stock market in our lifetime.
We just had a board. So you think we hit 7,700 near term, and then there's a pullback, and then after the midterms, is it coincident with the midterms, the pullback, and then we had higher afterwards? Was that correct?
Yeah, I think that's. I mean, this is our best guess. I think June markets can still build on the gains, just not at the rate that May did, and I think it is money moving downstream. So there's going to be software rallying and beneficiaries of AI. But between, let's say, June and October, we do have to digest potentially 3 major IPOs coming, and the market will try to understand Kevin Warsh's new sort of model for inflation, but I think the market always tests the new Fed. And then we have that normal seasonality around midterms. And so I think we could have a drawdown that'll feel like a bear market. And as you know, that February to April was just a 9% decline, but it felt like a crash. And so I think markets are going to really struggle if we start to have a drawdown. And then, of course, from October, I think that's when a very strong rally starts.
Andrew Wunson, I was gonna say how bad you've been on crypto, but I don't know.
I was going to go to a slightly different place, and we could do that too. But I was going to ask him about Mark Cuban. I don't know if you saw Mark Cuban said that he's now dumped or sold all of his Bitcoin, given that he no longer believes it's acting as a hedge again.
Okay, so before we go further here, let me talk about this whole situation. There's a belief that market is supposed to have already started to weaken in May, right, and sell off all the way. We can call it to October, maybe closer to Halloween, right, and then beautiful recovery into year end. That's a belief, And usually when I see a lot of people believing something all simultaneously about where the market's headed, it makes me think, maybe we're not going there, right? And so the ultimate oppo situation in regards to this would be a scenario where what happens? We have the market continue to be phenomenal all the way to October. And then in October, at some point in time, the market starts to really downfall, and then downfall all the way into year end, right? All the way to Christmas. That would be the ultimate opposite situation, which, it doesn't always work out that way, but a lot of times I do find that the market can do the opposite of what everybody thinks. And so the hilarious thing would be if we run all the way to October and then we have a big, correction in the market or something like that, right? But if you're a long-term investor, don't bank on anything like that happening. Too many people try to play this timing game and like, I'm going to sell out because we might fall for the next 3 months and I'll buy back in, or I'm going to do this. Don't mess with it, man. Don't mess with it. Keep it simple. Keep it simple, stupid, as they say, man. You just play your game. Don't worry about trying to time in and out. Market might fall. Market might go up. No. Worry about your individual stocks. And when it's time to sell those, sell your portions off and play that game, right? But don't try to play the timing of the market. We're going to fall at this time. Who knows? That's throwing darts at a dartboard, right? And like I said, Tom Lee's been wrong plenty of times in regards to the market as well, right? Which leads me to say, Tom Lee, in the bull markets, everybody loves Tom Lee, but I can just tell you, I remember 2022, people hated him. Just wait. The next time we get a big down cycle in the market, they're going to hate Tom Lee again. Next time we get a big bear market, they're not going to like him.
Inflation or anything else, argues gold is proven to be a better bet, and that Bitcoin has not acted the way it should if it's supposed to be digital gold. What say you?
Well, on the one hand, I think Mark is right. Crypto's been disappointing because crypto should move with, equity markets, and it should be rallying with software. Software has really started to rally big, and crypto hasn't moved. So I think there are what I call, quote, rage quitting, people selling here as if something is wrong. I mean, I think that's what always happens at the end of crypto winter. If someone asks me, is the thesis for Bitcoin or Ethereum broken? It's absolutely not, because the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money, because mass and compute, or compute and energy, however Elon puts it, really are what's scarce, and you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce and operating websites. You need decentralized identity and verification. That's really what crypto does. And we know Wall Street wants to go towards tokenization. It's a vast improvement in efficiency of actually how money moves. And it's an innovation. Well, that only happens on Bitcoin and Ethereum and other smart contracts. So the future isn't changed, but the spotlight today is, of course, on semis, memory, starting on software. But as people focus downstream into the future, that's really, I think, when the bid comes for Bitcoin and Ethereum.
Because when you talk about stocks, it's
really tough position for Bitcoin to be in right now. Down 67K. Just from the perspective of, you got the NASDAQ at all-time highs, man. And NASDAQ at all-time highs. So many of the risk-on type stocks like Nvidia, the semiconductor companies, AMD, Micron, Roland. Like, that's usually when you would say, like, if you've been studying Bitcoin for any amount of time, you paid attention to it any amount of time, like, Bitcoin would always move heavy. The semis are moving heavy, the NASDAQ's moving heavy, Bitcoin's moving heavy, Ethereum's moving even heavier. And the fact that these ones just continue to downtrend viciously, makes you say, gosh, like, what would happen if this NASDAQ were to eventually have a good-sized correction? Whether that be the summer or whether that be, let's say, in the fall time. And that might not happen at all, but I'm just saying, like, what happens? What happens if, we continue to rally the market, Bitcoin and Ethereum continue not to move, and then October rolls around and all of a sudden we start a vicious sell-off that goes all the way into November and all the way into deep into December, right? Where's Bitcoin go in that situation? Do we see a 3 on a Bitcoin, right? 30,000 something. If it's this week with the NASDAQ doing great, what happens if it goes the other way? And that is it's interesting because this doesn't usually happen. Doesn't usually
so easy
happen.
for you. You did it. $10 times 4. That's $40. Put a multiple on it. That's 800 points. Why do you even try with Bitcoin or Ethereum? What's your comparable analysis to be able to come up with anything to make predictions about Bitcoin or Ethereum? There's nothing that you can base it on, Tom.
Oh my gosh. That's what I've said this whole time, right? There's no way you can value Bitcoin or Ethereum. It's never been that way. It never will be that way. Every case I've ever heard, and I've heard so many people try to argue with me about that point about like, no, you can value it based upon, no, it's just what somebody else is willing to pay. That's as simple as that. There's no it's not like a company and you can say, well, the fair P ratio, the fair price to sales ratio is blah, free, cash flows, blah, blah, blah. You run my DCF model. There's nothing like that with Bitcoin, Ethereum, right? Anything that says otherwise is just an IQ test.
Except maybe a psychology or sentiment or something.
Yeah. Well, actually, market sentiment plays a huge role because it's sort of essentially risk premia. But there are two proven ways to value crypto. One, of course, is just network usage, because wallets and activity per wallet still explain, even now, 87% of the rise of Bitcoin. So as long as more people use it and they're transacting it, the value of Bitcoin should go up. It's a network effect. And the second is the umbrella value of gold. Gold when it hits 5,000, if Bitcoin had the same network value as gold, and gold is not as scarce as Bitcoin, that would put Bitcoin at around 2 million. So to me, I think there's still two ways to look at the value. And of course, for Ethereum, it's been shown for every dollar of tokenized assets, tokenized dollars or others, it's created $1 value for ETH, the coin. So if you believe Wall Street's going to tokenize, Ethereum's price should go up a lot.
All right, Dan Nile.
Investment Management. Dan, it's always a pleasure to speak with you. I first want to get your take, not necessarily specifically on HPE earnings, but the reaction to HPE earnings and the sort of vertical moves that we've been seeing. What's your take? Is this rational?
Well, two things can be true at the same time. You can be in an irrational market, but still have a lot more to go. And so I think that's the way you want to think about things right now, because remember, there's been a lot of bearish calls on semiconductors really starting, I think, March of last year, guys having big put positions. This is all a fraud, etc.
Whoa. Hold your horses. One flip and flapjack a moment. Listen, I heard people talking bearish about Nvidia all the way back in 2023. Remember Nvidia started that first initial massive run? And people, even back then, were questioning, and they're like, Nvidia's revenue is not even going up this much. Why is the stock going up this much, right? People in the know already knew the numbers were about to go crazy, right? But people were already questioning it. So, it's just been that game for years now at this point in time. But it's not like we're just at a first inning of people questioning. They've been questioning for a long time.
But you fast forward to...
And by the way, that's the healthiest thing for a market. The healthiest thing for a market is when people are asking questions like, is this sustainable? How long is this going to last? Are these numbers real? Where are they getting the revenue from? I think that actually sets you up for a very nice upcycle. If it was people were just looking the other way and just believing everything and not questioning anything, that's the market you got to worry about.
January 30th of this year, when you had OpenClaw get formalized, right? So agentic AI. And then all of a sudden, token production goes from being up 20% over the prior 2 months to up over 130% in the next 2 months. You're in that next wave of demand. And so are some of these moves, you go, does that really make sense on one day? No. But if you think about the fact that OpenClaw just came out, 4 months ago? It's going to take probably another year for corporations to really embrace this. And so I think you're going to see, upside from here through the end of the year, which is sort of what our call is.
Dan, I guess at some point, given how far a lot of these stocks have moved, the way the companies have been re-rated in terms of their multiple, you almost have to make the call as to whether something structural and long-term is going on here, as opposed to just, hey, a particularly hot part of the typical cycle.
Well, I mean, it depends on what you consider overvalue. If you say, well, if a company is growing revenues at 80% and the PE multiple is 26 times, is that overvalued? Especially compared to the S&P that's growing revenues at 12% this year, that's trading at about 22 times. Obviously.
Exactly. It's all relative. It's all relative. Like, you can't. Sometimes people look at a stock. This is a big mistake a lot of investors make. And I used to make this mistake when I was in my first, several years of investing in the market. I would look at a high P stock and say, can't buy it. It's crazy. That stock's trading at a 50 P ratio. That's ridiculous. All these other stocks trade at 10, 15, 17, 18, right? Big mistake. You have to look at where growth rates are at, where future growth rates are likely going to be over the next several years for this company. And from doing that, you can get a better understanding about what a proper price to pay is. And that's where on 1000xstocks.com, you can run your projections, right? And you begin to understand, okay, if this stock is trading at a 50p, am I actually getting a great deal? Because the stock could be trading at 100p, and you might be getting a steal deal on that stock if they've got the sort of growth that can justify it, right? And you're all of a sudden you're looking and you're like, oh my gosh, they're going to eat down that P ratio in a huge way over the next 3, 4, 5 years. And so don't ever get caught up into that game. Same thing as looking at a cheap P, right? You might look at a stock and it's got a 7P ratio on it. Like, oh my gosh, I found the greatest deal in the history of the stock market. All these other stocks trading at a 20P ratio, I just found one that's a 7. That doesn't mean it's going to be a great stock. That doesn't mean you found a great steal deal. It might mean their business is being disrupted and their revenues are going to be going down, their earnings per share is going to be going down, right? You might have found a gem, but you might not have. That might be a gem that a lot of people passed up on for a reason. So just keep that in mind as well. Anyways, okay, let's keep rolling here.
The company I'm referring to is Nvidia. So I think there are some definite disconnects between what certain stocks like an Nvidia is trading at relative to other names out there like a Cerebras, where you go, really, 100 times revenues? Does that make sense? But I think in general, that's why stock picking gets more important going forward. Right. And the bottlenecks keep changing, right? Where CPUs, who cared about CPUs? Then late March, when people started to figure out, and we wrote about this, that all of a sudden the ratios are changing. Now everybody's talking about CPUs.
Right. Dan, we just want to show in Chicago the CBOE closing bell, ending the regular day of trading.
Lisa Su talked about this at least 1 to 2 years ago. And this is where doing the real research pays. And this is where I got a lot of my bull case from, directly from Lisa Su, and what she would talk about publicly, right? She would talk about how there's a difference between training and inference, right? And training's been the big thing that took off initially, right? Training these models, and Nvidia capitalized on that better than anybody, and that's one of the big reasons it's a $5 trillion plus market cap company, right? And AMD missed it when it came to training. Nvidia got out there and they ran, and they've capitalized on it in a huge way. But Lisa Su's talked about inference is a way bigger long-term opportunity for the whole marketplace, right? And she's talked about how AMD is perfectly positioned for inference. And the more you look at it, the more you're like, yeah, like the training's been key to train these models up, but the biggest opportunity long term will not be training the models. It's going to be people actually using the models. You going on to ChatGPT, you using Anthropic, you using Gemini or Grok or any of these other services, like, and doing all these queries and asking all these questions and doing all this and putting on all this information and needing it to do this and that, and I need a video of this, I need an image of this, and I need a spreadsheet of this or whatever, right? That's where it's really at. And Lisa Su talked about this a long time ago. So if you were paying attention to what Lisa Su was talking about at that time, and she doesn't just talk. She doesn't just throw things out there and like, pie in the sky, blah blah blah. No. If she says it, it's if anything, she's sandbagging.
For options, it sounds like you would be potentially a buyer of some of these bottleneck stocks. Where do you continue to find value, recognizing the fact that even if the moves seem irrational, they might have much more to go?
Well, Nvidia, as I said earlier, that's not irrational. Mm-hmm. That's our biggest position by far. We add more to it.
But how about like an Intel or a Dell? I mean, that's how you made your bread and butter way back when.
Intel, we started writing about that late March, saying they were going to be a huge beneficiary of this move to CPUs. And, today obviously got hit because everybody's concerned about Nvidia. But demand is through the roof because agentic moves from 8 GPUs to one CPU, all of a sudden with agentic, you're closer to unity. And that's a huge mathematical change in where the bottleneck sits. Intel's the leader in server CPUs. Will NVIDIA gain some share? Of course they will. They have no share today. But does that mean that Intel's going to suffer when they've got the majority of that? No. So it may take a few more days for this to settle out. But at which point then I think, and by the way, with Intel, you have a couple of ways to win. Number two, even if ARM does take off, I think there's a good shot they end up with Apple as a foundry customer before the end of this year. Nvidia invested $5 billion in them back in September, so let's not forget that. And then you've got the fact that they should be the foundries for some of these hyperscalers. Don't forget they have an announced agreement with Google. Tesla announced working there as well. Mm-hmm. And all of that should help us get a better source of supply in the US for these advanced chips, 90% of which come out of Asia. So I think there's a couple of ways to win with Intel, which is why I like it.
The ultimate stock is not Nvidia. It's not Intel. It's AMD. AMD's perfectly positioned in the marketplace, right? They've done a great job now finally catching up to Nvidia and having GPUs that can be respected alongside Nvidia, right? And they're much more well-positioned on the CPU side than Nvidia is, right? And then you look at somebody like Intel and it's like, okay, they're decently positioned in CPU, still not as well as AMD in my opinion, right? But GPU is like, no. So AMD is the ultimate stock. Like, and I can understand, because I have heard some people talk about AMD is going to be bigger than Nvidia. That sounds like a ridiculous statement, right? AMD bigger than Nvidia, $5 trillion plus company. You could kind of get there mentally. One is the GPU business is going to obviously go insane over the next several years, right? But additionally, they're the most well-positioned CPU company to really benefit from the AI wave, in my opinion, and probably in Lisa Su's opinion as well, and many people that are well-versed, in this industry. And so if you think about where pricing of CPUs can go over the coming years and what AMD is going to be able to command, and I mean, gosh, there's a case to be made. I'm not banking on that, by the way. I'm not banking that AMD is going to be a $5 trillion plus company. It's going to be bigger than Nvidia in the next 5 years. But I can understand the thought process on how people go to that place of imagining an AMD bigger than Nvidia 5 years from now, right? At a $5 trillion or $10 trillion market cap. So, but this is where it just gets, and this is why AMD is just like a fun stock to hold. If you already own it, it's just such a fun stock to hold, because you're looking and you're like, you see these opportunities and you start, kind of thinking about like, how big could this company really be? And then you start thinking about, could it be bigger than Nvidia? And this is the exciting part, right? And this is why AMD stock, as much as people might not like it if they're not in the stock, that's why it's going to continue to move higher, right? And that's why I keep talking about, like, don't be surprised if AMD stock goes to 1,000 plus this year or next year. Don't be surprised, because it's arguably the most exciting stock in the market. The more people are starting to put the pieces of this puzzle together, right? Alrighty, next one up here, DNI.
We're going to show you right now, which did get that midday pop, reacting as if this is a major revenue opportunity, is it?
Look, I think after all the CapEx that they're spending, I mean, this is I view it as almost a major step in the right direction, because it comes down to 3.5 billion users. How are you going to monetize it? And I think the subscription, they've obviously played around with it. This is what investors want to see. Now it's about, how do you monetize the user base? And look, this is not the end step. It's just an interim step as they integrate more and more AI into that user base. That's going to be the monetization. I think that's something where the stock is not reflecting still, I think, some of the revenue opportunities that we'll see over the coming years.
You got 900.
Meta. So there's two things I got to do here. One is what they're doing, talking about new revenue opportunities and these sorts of things. This is monumental for the company, right? So people can start to understand, dude, why are you spending $100 billion plus a year? So we can get shown a better video when we go on Instagram or you go on Facebook? That's why we're spending this much? Or so an advertiser can get a little better ROI? We really need to spend $100 billion plus on that? No. But if you start understanding all these new potential revenue opportunities, all of a sudden people can go, okay, now we see it, right? The other thing Meta's got to do, they got to start breaking out their businesses more. They got to start giving more details on where growth is, what the growth rates are, those sorts of things, right? So then investors can understand better where these opportunities are. Let's say they announce some new business they're going into, right? That's a new stream, some cloud business, let's say, for instance, right? Let's say they're going to move in that direction, whatever direction. Break the numbers out so we can see them. They'll get people very excited because they'll see like the core business is growing at these very substantial rates still, but then they're going to see, oh my gosh, they got this other new business that's growing 1,000% quarter over quarter, right? And that's just very, very exciting. So they got to do more breakouts, in my opinion, as they get into more, revenue streams from different opportunities.
Outperform. You mentioned investors want to see it. Do users want to see it? Are they going to be willing to pay it? We're only talking about what seems to be, according to some of the reporting here, $3 to $4 a month for a sub for Insta, Facebook, and WhatsApp.
Yeah, you start to get any sort of adoption. You start to now look at revenues that could be up 2, 3, 4%, and then so on as the adoption curve increases. So I think it's something that investors are not really factoring in, that they were going to do something like this. I think from a timing perspective, it's maybe come earlier. It shows a confidence in terms of their ability to roll it out. And look, this is going to just be a continued narrative, whether it's Microsoft, whether it's Meta, whether it's Apple. How are you going to monetize AI? Chip companies have shown how they're going to monetize, just like software.
Yeah, but you're talking, okay, that's interesting how you say it reflects a confidence on their part to do this. Some may look at this and suggest that it shows they're, a little late to the game on how they're going to monetize AI beyond their core ad business, and you just throwing a bunch of stuff at the wall and seeing what sticks. Because Zuckerberg apparently at this shareholder meeting also said, or at least he opened the door for a cloud business. Is that a moonshot or is that legit?
Look, I think cloud, obviously that could be maybe a bit more of a moonshot, but to me it's okay. How do you slowly diversify away on the advertising side? Advertising, that's going to continue to be obviously bread and butter, but you look at what they're doing, it's going to continue to be diversification, and I view that as a positive because their install base is unmatched. So as they monetize it, part of our bullishness in terms of, where I talk about $900 and ultimately, what could be higher, this is the key prove-it year for Zuckerberg and Meta. It's a step in the right direction after obviously a quarter where it was all about CapEx, and obviously that was more of a dog ate the homework type of conference call.
Well, let me ask you this, because as you were talking, I was looking at stock, so it's down almost.
An interesting potential acquisition for Meta, and this stock's fallen a lot recently. Intuit would be a very interesting buyout from Meta. It's been a long time since they bought out a company. I think they could get it through the government now. The whole companies buying other companies, situation, that's done now. So I think it would be very intelligent if Meta tried to buy out Intuit. When you really think about Meta, they're the place companies need to advertise, right? And especially small and mid-sized businesses. They also obviously have large businesses that advertise on them. But you really think about who's in with small businesses, mid-sized businesses, it's Intuit, right? And so if they could acquire Intuit and kind of seamlessly integrate Intuit with the advertising side, and so they could be able to see what businesses are bringing in for revenue even easier and all those sorts of things, because the QuickBooks side of the business and the Turbo side of the business as well, right? I think there's a lot that could happen there. And then if you've got these companies already using you as the platform they advertise, and also the platform they're running all their books through, then why not be there for their cloud needs as well, right? So they don't have to do that, but I think that could be actually interesting. And I'm just trying to think about how they could build out the whole system. And I'm like, dang, that could be pretty
4% year to date.
It's cheap.
How much pressure do you think they're feeling inside that building? And how much pressure is he feeling himself, Zuckerberg, to deliver something that's going to wow the market and wow investors back into the name? Because outside of Microsoft, which is down as well on the year, everything else.
Intuit's whole market cap now is $88 billion. So Zuckerberg could probably buy the company for 120 to 140. Big number, but that's not crazy when you consider Meta this year alone is going to probably spend, who knows, 140 billion on CapEx or whatever. And Intuit's a immediately insanely profitable business. That's the thing with Intuit. It's not like this is some company, you know, that's like, oh, they're ever going to make money. Like Intuit will probably clear $8 billion to $10 billion in net income this year. Somewhere around there, or let's call it over the next year. Intuit will probably bring in, I would say, $8 to $10 billion in net income in the next year or two. It's not a small number. So, you know, even if you didn't have the integration, you could make back that spend probably in a decade or so, you know, because they'll continue to increase that net income in the short term at least, right? But then it's all about the integration and like what that could do. And then if you could add the cloud side of the business, it's intriguing.
It's like it's a pretty good story to tell. Outside of these two.
Pressure is definitely building because when you're spending 120, 130 billion from a CapEx perspective, they need to now show. And I think that the wake-up call was the last earnings call. Because when you contrast that with Amazon and obviously others, for Meta, that's kind of putting Meta in the investor penalty box. You guys start to show it. Next 2 or 3 quarters, this stock's either at 750, 800, or it's where it is or lower. The point is, this is kind of a fork in the road period, in my opinion, for Meta, but a step in the right direction in terms of it rolling this out.
But they keep finding themselves.
Listen, if you want to think about owning Meta stock, listen. This is what the stock does. It'll go on an insane run. Stock will double up, triple up, quadruple up like that. And then it will go through a year, 2 years, sometimes 3 years, but usually a year or two of just nothing and downtrending. It's happened several times in its history. And so we're in one of those time periods with Meta. And once we get done going through this period, which who knows, it might last another year, it might last another 18 months. We'll see. It might come out of it soon. Like, we'll see. But once it comes out, that's going to make a massive move. Like you'll see the stock make a double up type move quick.
In the penalty box. You know what I'm saying? Like, and it wasn't just after this last quarter. It was like 2 quarters ago. They were in the penalty box with a major penalty before. Like, they can't stay out of the box. How do they stay out of the box?
Look, and I think for them, that's the quagmire because they're trying to really turn around a cargo ship in a river. I mean, they're trying to make a massive transformation while investors are obviously watching every single move. When you think about the hyperscalers or chip companies, they're kind of front and center in terms of ones that are going to benefit from AI. Meta, we'll see Apple in a few weeks. You look at Microsoft when it comes to, you know, one where it's still guilty till proven innocent. Mm-hmm. These are the names now that now need to show. It's not just about talk, it's about execution.
Real quick. Apple, new high. You just mentioned WWDC will be there, so that stock's up. And how much pressure is on Salesforce tonight with their earnings?
I mean, if you from a pressure level.
Okay, so we already got Salesforce earnings out of the way, but another interesting potential buy for Meta. I don't like this one as much, but they could buy out PayPal as well. A lot of small businesses use PayPal, obviously, but I think Intuit's that's the one. If I was Zuckerberg, I would try to buy them out, man. You can make some magic there, okay? If you're looking to join my private group, you want to level up your investing game up to a much higher level than where you're at. You want access to my Become a Master Stock Market course, Millionaire Playbook, Stock Options Mastery course. You want access to my Dividend Investing Mastery course. You want access to my Financial Statements Mastery course. You want my Valuation Mastery course, so you know if you're getting a good deal or ripped off when you buy a stock. You want access to the private Discord chat, exclusive weekly videos. I just recorded my private group exclusive video today. You want access to all that good stuff, the moves I'm making. Plus, we'll send you your Steel membership cards. That will be the pinned comment down there. And do keep in mind, once again, we are going to be closing that to new members very shortly. So if you want to get in there ASAP. And we'll send you your box to you as well, which I can't talk about. One is I'm going to give some advice for everybody in the market right now. This is a very interesting time we're in. A lot of opinions being thrown out there. A lot of people confused on where the market's headed from here, where stocks are headed from here. So I just want to give some advice as somebody who's been in this market for about 18 years now about this market and handling this market. Number 2, we're going to get into 5 stocks to buy now. Some of the best opportunities I can find in the entire stock market. Some of these opportunities are unbelievable. And if you look at all the ingredients of these stocks, like they have some massive moves ahead, at least in my personal opinion. I'll be sharing that in this video here today. One thing only I need from you guys, as a sign in my garage says, I just need you to smash that like button for this video. We got a lot to go through in here in this video, so we're just going to get right into it. I just need you to smash that like button before we get moving. And additionally, make sure you subscribe to the channel if you're not already subscribed. We are now at, let's see, 930 something thousand subscribers. I appreciate each and every one of you for being here as always. Okay. Alrighty, ladies and gentlemen, you ready to flip some flapjacks or what? Okay. Listen, I'm starting to see posts like this. Why would anybody buy crypto right now when stocks are actively doing this, right? You know, the post was showing Micron and many other stocks and how well they're performing, right? And this is fascinating because, you know, I remember the days, and it wasn't that long ago, when the crypto people would talk trash about the stocks. And they're like, oh, look at you guys making your little bits of money. Look at how much money we're making out there, right? And it's just fascinating to kind of see the roles reversed at this point in time, right? If you look at since the 2021 highs, Bitcoin is only up 9%. Ethereum is actually down 56% during that time, while you have the Qs, think of it as a NASDAQ, up 88%, Google McDougal up 148%, AMD up 244%, Nvidia up 638%, and then a stock like Micron up 1,239%. Absolutely unbelievable. My opinion on this whole deal with, you know, Bitcoin, Ethereum, crypto in general versus stocks, it's kind of an irrelevant thing, right? Like, I wouldn't, if Bitcoin was running huge and the stocks were down, like, it is what it is. Like, you know, I just don't think you can look at any of these sorts of things and kind of feel better about yourself or worse about yourself. Like, it is what it is. Like, okay, Bitcoin's not doing a thing, and meanwhile tech stocks are running. That doesn't usually happen, but that is what's going on right now. And I'm sure someday in the future, maybe Bitcoin, Ethereum will be running heavy and stocks won't be doing a thing, right? And you know, the other side will be talking trash. So, you know, that is what that is, right? Now, a bigger thing I'm seeing out there is people looking at the market right now and they're saying the market is so high right now, right? Don't buy into the stock market right now. It's too high. The prices are too high, right? The Dow's too high. The S&P 500 is too high. The NASDAQ's too high, right? And listen, you know, the market is always going to be high unless you happen to be in a crash at that particular time, but the market's always going to look high, right? 20 years ago, they thought the stock market was very high. 30 years ago, they thought the stock market was very high. 50 years ago, they thought the stock market was very high. Like, they're always going to think it's high. If you think the S&P 500 is high now, the NASDAQ is high now, just wait until you see the prices these things are in a decade from now, in 20 years from now, in 30 years from now. You'll look back at this time period and be like, gosh, the stock market was cheap back then. No different than I could have looked at the stock market 10 years ago and felt like, oof, the stock market was high, right? Like, that's the way it always is going to feel. The stock market's high at a particular time, right? And as far as earnings go and trying to predict earnings, like, people are continuously wrong in regards to earnings. So the whole subject about trying to freak you out of the stock market because, you know, we're at all-time highs and prices are so high, don't get caught up into that whole game. That's just a silly game to get caught up into, right? The next game people are getting caught up into is Trump, geopolitics, what's going on, Iran, all these sorts of things. You see this here today. Trump tells CNBC, I don't care if Iran negotiations are over, right? And so everybody always freaking out over these geopolitical things and all these other subjects, right? And so this is something that gets people caught off guard, scares people away from buying stocks, scares people away from holding stocks, makes people say, oh gosh, I got to take profits because this could go wrong, that could go wrong, all these sorts of fears, right? Listen, when I first got in the stock market, I was running track, I was in college, right? I was 18, 19 years old. And at that particular time, we had the great financial crisis going on, right? There was a TARP program going on, which freaked a lot of people out. We had a debt crisis going on. Obama just got elected. Every new president that comes in, there's always a lot of fear about, like, they're going to take the country down and lead us in the wrong direction, all those sorts of things, right? When I first got into college, like, gas prices were insanely high, so people were saying gas prices were too expensive. By my second year of college, my sophomore year, gas prices were insanely cheap. It was like $1 something a gallon for gas in Arizona. Like, it was like, oh man, gas was too expensive, then gas was too cheap, right? And you had all these fears about this and about that. And every year I've been in the stock market ever since, there's always been a lot of fears. Now the fears, listen, here's where they get you, okay? Here's where they always get you. It's always different. The fears that were going on when I first got in the stock market are very different than the fears 2 years after I got in the stock market, which were very different than 3 years after that, which were very different than what we're going through right now, right? but it's always something new. And it's always something that's going to feel unprecedented. It's going to feel like this has never occurred before. It's going to feel like this time is different, right? And it's there to scare you out of stocks and scare you out of these unbelievable opportunities in the market and get you to think scarcity mentality. And some people can get to that scarcity mentality easier than others, and those people always get freaked out. And it's a game that is going to be, it's like a psychological game that's going to be played with you over and over again. And you just can't fall into the traps, because every time it's a trap, and it's a new trap every single time, right? Back in those days, I was driving a 1977 450 SEL Mercedes-Benz, okay? This thing, the AC didn't work, the heat didn't work, the seats were all falling apart. It got about 8 miles per gallon. Like, I don't even know how that thing would ever pass emissions. And I had about $2,000 to my name, right? And I was whipping that thing around, and I was very enthusiastic. And I said, I'm going to be a very wealthy man in this world, right? Like, there's an incredible opportunity for me out there, and I'm going to make it happen over the next 10, 20, 30 years, right? And I'd already previously seen my parents, go from food stamps and government assistance and all that to make it into the middle class, right? I got to see their success of, what it meant to, be able to buy a home in a middle class neighborhood, be able to, drive decent vehicles and those sorts of things. And so I already got to see firsthand, like, okay, you can climb the ranks. And it's not like if you're in poverty, you're stuck in poverty forever. You can go from poverty to the middle class, right? You can go from the middle class to rich. You can go to from rich to ultra rich. Like, you don't have to be stuck wherever you're at right now. Like, the world's out there, and it's up for you to make it happen, right? And I'll tell you a story, and this is how you kind of keep climbing these ranks as years go along. I just moved to a new area, right? Fortunate to get a new house. And, beautiful, looks over the whole city. This is, view from my balcony, looks over the whole city right down the Las Vegas Strip, right? But the interesting thing is, my old community, I would be seen as, maybe the wealthiest person living in that community, or one of the wealthiest, right? In my new community, definitely, I'm one of the more poor people that live in my new community, right? Like, this is a billionaire community. And so it's important as you climb the ranks, you kind of, understand there's new levels to climb and whatnot. And I'll give you a good example in my new community. There's billionaires that live in my community. I can always tell when the billionaires are in town, because they have multiple like SUVs and drivers that just wait outside their house all day when they're in town. And like, I'm just like, that's just a crazy way of living. Like, I think like if I got to go somewhere, or I got to drive my kids somewhere, like I'm going to get in the car and I'm going to drive them, right? And these people just have like, Rolls Royces and, Escalades just like stacked in front of their house, just waiting to take them wherever they need to go. And I'm just like, dang, man, there's like levels to this game, right? There's levels to this game. And so I want you to just take a moment and imagine where your life could be a decade from now. Imagine where your life can be 15 years from now, 20 years from now, right? Think about where my life was 18 years ago with, $1,000, $2,000 to my name, right? My first investments were $300. And then look at where I'm at today, right? And if I keep working and, keep investing in those sorts of things, imagine where I'll be a decade from now, 2 decades from now, 3 decades from now, right? And so with you in your own life, just understand wherever you're at, this is like a baseline level, and just understand if you put in the work, you invest smart, make money, imagine where your wealth is going to be a decade from now, 15 years from now, 20 years from now. Like, it'll be a night and day difference. You'll look back and be like, remember when I was there, right? And you'd be like, okay, I think we came a long dang way, right? No, for those of you that want to take your knowledge up to much higher levels than where you're at, you want access to all my course curriculums, you want to join my private group that is open for right now. It will be closing to new members here this month in June, so do keep that in mind. That will be the pinned comment down there. Demand has been ridiculous for the private group for really like the past year, and it's been really ridiculous recently. We've been receiving 50 to 100 applications a day. I want to take some time off. And also I want my team to take some time off this summer. So we're going to be closing it to new members very soon. So if you want to join us in the private group, you can apply now. That will be the pinned comment down there. When you join us in there, you will get your Steel membership cards for the private group, 4000X. And if you join us on a lifetime basis, we'll send you this bad boy as well. And we'll also send you, not a lot of people know this, these are our new membership boxes now at this point in time, which I'm not going to tell you anything about the membership boxes really, because I like it to be a surprise, but there's that as well. And we will send you that as well, okay? Alrighty, ladies and gentlemen, let's get rolling here. 5 stocks to buy now. Alrighty, well, here they are. Number 1, this is a multi-buy, I call it, okay? So this is 2 stocks, they're both buys right now. I'm going to link them both, as together essentially. But it's a combo buy. It includes ServiceNow and Salesforce stock, CRM and Net. Okay, and these are two stocks that they've went on a very strong recent run. Like, look at ServiceNow. We were down tens of thousands of dollars pretty recently on ServiceNow, and then it just flipped. Right now, up $44,000 on that stock, and that's literally in like 2 week span, a week span. Like, it's just insane how fast things switch there, right? And in Salesforce, we were down like, oh my gosh, like, I don't know, $40,000, $50,000, $60,000, and now all of a sudden we're up to a $14,000 profit, right? It happens quick. But this is a nice combo buy. Now, I'm not going to go in depth and explain to you Salesforce business model or ServiceNow business model. If you want to understand those business models on a high level, go to 1000xstocks.com. Click our reports feature, type in CRM, and then click generate entry level report. That will explain in detail everything you got to look for with Salesforce in a matter of 20 minutes. You'll be able to understand Salesforce on a pretty high level. This is going to explain it to you like you're a 9-year-old, okay? And then generate hedge fund level report, go much deeper. So I don't want to spend, once again, 30 minutes trying to explain to you Salesforce and ServiceNow business models and their big agentic opportunities over the coming years and things like that. Run the reports and you'll get to a very high understanding of these companies, right? Now, the beautiful thing about ServiceNow and Salesforce stock is they trade way too cheap given their growth rates. ServiceNow, we're talking about a company that should grow, high teens, low 20s for years to go in the future, and it's just trading way too dang cheap right now, right? Salesforce, forward P is 17 on that stock. This is a company that I expect to grow, I would say, around 10% to maybe low teens revenue per year, every year for years to go out in the future. Because do understand with these companies, the agentic opportunity, these companies have insane growth rates when it comes to their AI agent business, but it's a very small percentage of the base of the overall business. As years tick on over the next few years, that's going to become a much bigger number. So do keep that in mind, right? So both of these stocks are priced way too cheap. Now, these are the ideal stocks. Like, look at a company like Salesforce and look at that revenue growth. Look at where we're expected to go here, right? Look at the margins of this company. That's ideal situation. You got revenue up and to the right. You got margins very consistent and high margins at that. It's beautiful. It's absolutely beautiful. Look at ServiceNow, right? Now, ServiceNow, keep in mind, this is much more exciting stock than Salesforce. So I like both stocks. I like Salesforce. I feel like it gives me a little more protection. I like ServiceNow because it gives me a little more growth, right? And so ServiceNow is a more exciting one. Like, look at that growth rates, and this is where we're expected to go. But the margins are a little crazier in regards to ServiceNow. They're a little more up and down, so do keep that in mind. So that's the way I would look at these companies. ServiceNow, bigger long-term opportunity in terms of making money in the stock, in my opinion. Salesforce, safer risk-reward profile, in my opinion, than ServiceNow, okay? Look at the earnings per share. This is on a trailing 12-month basis here. This is where we're expected to go on ServiceNow stock. This is free cash flow and where we've gone on ServiceNow stock on a trailing 12-month basis. Look at this. This is ServiceNow's free cash flow per share. Look at that trend there. Ultimate setup. Historical PE, look at this. The historical PE is on the floor. Well, the free cash flow per share has never been better than it is. And it's going to get a lot better over the next few years, in my opinion, in regards to this, right? Look at Salesforce. Salesforce has a stake in Anthropic. I don't know if a lot of people know this, but their stake in Anthropic is now worth about $5 billion now at this point in time, right? And so if you're a big believer in Anthropic and the valuation continuing to grow, just understand Salesforce, like, stake is going to become bigger and bigger and bigger until they eventually sell it off. And then they could do what they want with that money once they sell that off. They could buy back more shares of their own stock. They could invest in new businesses. They could just keep it. Like, if they believe Anthropic's going to be a $10 trillion company someday, right? They could just keep that stake if they want, right? And this has become bigger and bigger and bigger. Now, the other thing to understand about these sorts of companies is, if you understand the leaders in the space, somebody like a Jensen who leads Nvidia, right? He's a huge believer in ServiceNow specifically, and he talks about that company being, an enterprise. It's an AI enterprise operating system. That's where Jensen over at Nvidia describes a company, right? And we've also heard about potentially T-Mans, traders there buying the stock as well. So there's definitely a lot of excitement around the company. Now, what are my price targets for ServiceNow and for Salesforce? Here they are. ServiceNow, I have this stock going to a $300 to $500 stock long term. Right now it's $135. So there's a long way of growth ahead for ServiceNow. And as far as Salesforce goes, $350 to $450 stock is where I have Salesforce going to long term. Right now, Salesforce is $209, right? So that's my opinion on these stocks. Both of them are incredible opportunities. I know they're running heavy. I know. But they got a long way to go. They got a long way to go in regards to that, okay? Number two of these stocks, these 5 stocks, is Elf Beauty. This is a stock that since I started buying it back in public count, I'm up 634% on the stock, okay? Now, this particular company, their big brand is called Elf, okay? You can go to your local Target, go to your local Walmart, go to your local Ulta store, okay? And you're gonna find Elf products loaded up in those stores, right? 75% of their products are $10 or under, so they're selling to everybody. That's the thing with Elf. It's not like they're like, oh, you know, I also own Estee Lauder stock. I've been buying that stock, you know, over the past year or two. It's an incredible opportunity as well, but from a different perspective. Estee Lauder caters to really higher income earners and those sorts of things. Elf can sell to everybody. It doesn't matter if you're rich, poor, middle class, everybody can afford Elf's products. They're known for very affordable products, and they're known for products that are high quality. And that's beauty because, I mean, it's hard to do that, okay? Then they own this company named Rhode. Now, Rhode is arguably the hottest makeup / beauty brand in the world right now. This Rhode company. This is led by Hailey Bieber, Justin Bieber's wife, if you didn't know that, okay? And, you know, their marketing, their design, everything they do is just like, it makes, you know, younger people go crazy, okay? They love these products. And the products have so much demand that they're able to build wait list for this. I've never seen anything like this. For beauty products to build a wait list, and then they'll drop, and then they sell out like fast. The demand is insane for this particular brand, Rhode, right? It's like, imagine joining a wait list to buy makeup products. That's a next level of a flex, okay? And so this Rhode company has, you know, years and years of growth ahead. And like I said, it's arguably the hottest brand in cosmetics, beauty, anything like that, right? Then they own this brand called Naturium, which has been very rapidly growing, especially like body washes and things like that, in skincare in general. So that brand's been rapidly growing. They own a bunch of other brands as well, but these are kind of the 3, I would say, main brands you should pay attention to: Elf, Rhode, and Naturium, okay? Now, look at this company. 29 consecutive quarters of sales growth. 29 consecutive, right? Now, along the road, they've had some time where, you know, it looks like, oh boy, are the numbers going to go down? Are they going to go down? They're going to go down, right? But at the end of the day, 29 consecutive quarters of net sales growth. One of 6 consumer companies out of 546 that has grown for 29 consecutive quarters, an average growth rate per quarter of 20%. That's impressive. Very impressive, right? This shows you the long-term health of the brand, right? 7-year dollar share change in basis points, 920 basis points of dollar share gain in color cosmetics versus these other brands, right? I mean, that's insane. Absolutely insane. If you look at Elf Skin dollar rank, right? If we go back just to fiscal year 2021, they were ranked number 25. Now they're up to number 11. Within the next year or two, they should be a top 10 brand in regards to dollar share. And keep in mind, they're very affordable prices. So I'm going to keep in mind there, right? $290 million cash on hand, right? And that's a big number because they're not a huge market cap company. This is a market cap of, you know, a couple $1 billion roughly, right? $2-3 billion. Additionally, they're buying back shares heavy. They recently just repurchased $50 million of stock. They have more on their repurchase program as well. Where do I see this stock going over the next few years? Here's where I see it going. These are my projections for Elf stock over the next few years, and you can see why I'm so dang excited about it, because I think this stock is going to produce one of the best return profiles over the next 3 or 4 years of any stock in the stock market, and that includes all these hot AI stocks you're looking at right now, right? The bull case for Elf Beauty: 20% revenue growth on average, 40% net income growth on average. We have net income margins only getting to 12% come 2030. That's not a high number, and we're talking about a compounded annual growth rate of 50% range. 50%, ladies and gentlemen. Base case, just a fancy way of saying what I actually expect. I had them only growing revenue 15% on average, 2027 through 2030, right? Net income growth on average 30%. I have net income margins only, ladies and gentlemen, net income margins only getting to 10%. That's not a high number, right? 10% is nothing. 30, 35p if you're growing at those sorts of growth rates. And we're talking about a compound annual growth rate that should be deep into the 30s. This is why I'm so excited about this makeup and beauty company, right? It's not just that it's produced me a 600% return since I invested in it. It's not just that the stock is down a ton from its all-time high, which its all-time high was over 200. It's that I look at the numbers, I run my projections, and I'm like, this is going to be a stock that, in my opinion, produces me a compounded annual growth rate somewhere between 30 and into the 50% range over the next 4 to 5 years. And it's hard to find those sorts of opportunities in the market. And so that's why Elf Beauty is, might be my favorite stock to buy right now in the entire stock market. Like, you told me what is the absolute best buy in the entire stock market. If I'm looking at the next 4 to 5 years, I honestly have to go with Elf. That's the number one, okay? Number 3 of these 5 stocks is Nike. NKE on this one. Listen, I'm not going to speak about Nike for 10 minutes here. It's the most attractive time to buy Nike stock since Jordan retired the first time. When Jordan retired the first time in 1993, right, Michael Jordan, a lot of people freaked out about the stock. They thought Nike was over. They thought the company was done. And really it was just getting started, right? And back then on a split adjusted basis, stock was $1 something a share. That's how far it fell, right? And this period we're in right now is the most attractive time to buy Nike stock since Jordan retired the first time. Incredible opportunity, and I think the stock's going to be a huge moneymaker over the next several years. And so this is one I can buy a big stake in and feel comfortable holding this for the next probably 5, 10, 15 years. It's not like it's going to go to a price and I'll be like, oh, crap, I got to sell out. It's not like a semiconductor company where you feel like, okay, it's had its run, right? Nah, that's not the way it works with a stock like Nike. You hold that baby long term. Alrighty, next one up here, number 4 of these 5 stocks is Celsius Holdings, one of the other best opportunities I can possibly find in the stock market right now. This stock has made me $26,000 so far in the public account. It has a long run ahead, okay? Celsius owns the Celsius brand of energy drinks. I'm sure you guys know it. You can go into just about any grocery store, any convenience store out there now at this point in time and see Celsius, right? They continue to take market share. The international opportunity for the Celsius brand is unbelievable over the coming years. And that's the thing people miss with energy drink brands. And so I was I don't know if I say early Monster investor. I was kind of mid-stage Monster investor, okay, back in the day. Early stage would have been kind of in that 2002 through 2010 frame. I kind of came in around 2011, and the stock did me phenomenal. This is back when it was still called Hans's Natural Beverage. But the thing a lot of people missed on regards to Monster is they thought, okay, the brand is already in all the food stores, already in all the convenience stores, and so do they really have that much growth? Yes. They can continue to grow consumers. They can go up in price a little bit over time. And the international expansion opportunity is what people always miss with these drink brands. The international opportunity ends up being even bigger than the domestic opportunity, right? And so with a company like Celsius, just understand the international opportunity for this company over the next decade is unbelievable. Unbelievable, okay? Then they own this brand. It's called Alani Nu. Alani, this brand it's really successful in general, but they're able to tap into a female demographic that usually hasn't traditionally been a big buyer of energy drinks, right? And Celsius was, I think, a company that was able to do this as well. It's just Alani took it to another level. And when you think about traditional brands like Rockstar, Monster, Red Bull, those brands did very well with males, but they didn't really ever do that great with the female demographic. And then you had somebody like Celsius come in, and all of a sudden that attracted the female demographic. And then Alani's like a next level as far as that goes. And from what I've heard, their flavors are absolutely amazing. Then they just acquired recently from Pepsi, because now they're in tight with Pepsi. Pepsi bought Rockstar many years ago. They did horrible. Like, Coca-Cola and Pepsi have never been able to figure out how to have successful energy drink brands. They've sucked at it. It's just absolutely the worst, right? And so many years ago, Coca-Cola decided we suck at this. And so they bought a bunch of Monster stock and they partnered with Monster, right? And now Pepsi decided to do the same exact thing, but with Celsius. And so Celsius is like, here you guys go. You can have the Rockstar brand. And so I wouldn't be surprised if Rockstar actually has a revitalization over the next several years and Celsius gets growth going back in the right direction. Pepsi, Coca-Cola, they understand how to run their current businesses very well of selling Coca-Cola and Pepsi. But man, they just are horrible at energy drinks. And Some companies are great at energy drinks, and Monster is one of those, and Celsius is another one, right? What are my projections for Celsius stock over the next several years? Here it is, okay? Look at this. So I have Celsius doing 15% revenue growth on average. And this is my bull case. This isn't anything crazy. With those 3 brands and the international expansion opportunity plus domestic market share, and then they'll be able to go up on price slightly, 15% is not a crazy number to assume under a bull case scenario, right? 15% revenue growth on average, net income growth at 25%, net income margins of 17%. That's decent for the drink category, but that's nothing amazing. If you're a great drink company, you should be able to get net income margins into the 20s, okay? Just something to keep in mind there. If you have 15% top line growth, 25% bottom line growth, they should be able to, let's call it, have a P of 35 to 40, which then gives me a 45% to 50% compound annual growth rate on Celsius stock. Oh boy. Oh boy, okay. My base case, just a fancy way of saying what I actually expect. My base case only has 10% revenue growth. I'm gonna be honest with you guys, I should bring up my base case to at least 12%. Like 10% would be almost embarrassing. If Celsius only grows 10% on average with Celsius, Alani, and Rockstar, and the international opportunity for Celsius and Alani over the coming years, kind of disappointing, okay? But that's what I threw in for my base case. And so it just shows you how conservative I'm being with my numbers here. 20% net income growth has net income margins get to 17% come 2030, right? You have 10% top line, 20% bottom line growth for a company in the drink category. 29 to 34 P would be very fair. We're talking about a compounded annual growth rate with those lame freaking numbers. Those lame numbers. And we're still talking about a compounded annual growth rate deep into the 30s. Can you see why Celsius is so exciting? And here's one of the best parts with Celsius, okay? Listen, I don't have to worry about like the economy. I don't have to worry about AI. And are we in a bubble? I don't have to worry about any of that. As long as there's humans and humans like caffeine, we're good. That's it. That's it. It's as simple. It's not complicated in regards to this one. I don't have to worry about perfectly timing it. It's not an AMD or a Micron where it's like, okay, they're so hot right now, but at some point in time, the demand's going to cool big time, and it's going to. I don't have to worry about any of that, and I can still make fortunes of money on the stock over the next many years, right? And also, they're diversified brand now, so I'm not just counting on the Celsius brand because they now have Alani and they now have Rockstar as well. So they have, we'll call it a 3-headed monster here. It's beautiful, absolutely beautiful, and so. I think there's something to be said about that, right? Now, additionally, people look at the stock price and they're like, listen, the all-time high for the stock was nearly $100. Today you can buy it for $30, right? And Celsius stock will get momentum, then it'll give it back, and they look at the stock and they're like, the company, yeah, it's amazing, and the long-term, where the stock is probably going looks amazing, but the stock, what's wrong with the stock, okay? Let me show you something, right? And this is one of the beautiful things about AI and being able to do these sorts of things. So I didn't have to spend 3 hours trying to research and time out all the different times. But I said, how many times did Monster stock fall basically double digits from its high between 2005 and 2015? So over that decade, roughly, right, the stock fell 29 separate times, 10% plus. So insanely volatile. So you might have thought, like, this must have been a horrible stock. Look at how vicious some of these falls were, right? This one here in 2006, almost 38%. This one here in 06, 30%. 59% here in 07 into 08. This one here, 54%. This one here, 31%. This one here, 25% fall. 31% fall, right? I mean, these are big downfalls for the stock. And so you might have thought, listen, Monster stock had all those falls 29 different times over roughly a decade. It fell 10% plus, including so many of these stocks times where it fell just, awful, right? So that must mean it was a horrible stock. Here's what Monster stock did over that time. It returned you over 3,000%. All that volatility, all that insanity, all those time periods when investors were selling it off because they thought, Monster growth was done, or the energy drink category wasn't going to grow anymore, or they're worried about the economy and people aren't going to buy energy drinks or those sorts of things, right? All those times to, have missed out on what, a 3,000+% gain over that time. And so just to understand, Celsius could continue to be a very volatile stock over the coming years, right? It can have some unbelievable moves. Like you're gonna, in my opinion, here's what you're gonna see with Celsius stock. You'll see Celsius stock in a 6 month span triple. You heard me right. You will see Celsius stock triple in a 6 month span. And you'd be like, are you flipping my flapjacks? What happened with Celsius that all of a sudden they tripled in 6 months? You'll see Celsius stock fall 50% like that. And you'll see a bunch of these insane moves. Celsius stock all of a sudden will double in 2 months. People are like, how did Celsius stock just double in 2 months? Like, did something magically change with the company? No. It's going to be remaining a very volatile stock. And you're going to look at it and you're going to be like, okay, but at the end of the pie, when it all is said and done, when all the dust settles over the next 5 and 10 years, I think the stock will be one of the best performing stocks over the next 5 to 10 years. I could be wrong, but these companies are very good. These drink companies are very good. They have some of the best return profiles, especially when they get diversified and they get to scale. That's a magic. You can get diversified, you can get to scale. Now we're talking. And if you can get in with the big distributor, Pepsi's now very invested. They own a substantial portion of Celsius. So they're very incentivized that Celsius has an unbelievable level of success over the next 5, 10 years. If Celsius, if this market cap on Celsius goes deep in the tens of billions of dollars over the coming years, that would be great for Pepsi. Because then if they want to sell off their stake and go buy back more shares of stock or whatever, they could. Or if they just want to hold it long term, they could. But Pepsi is very, very in with Celsius and needs Celsius to succeed over the coming years. And so they both need each other. Celsius needs them for the distribution, for their different brands all around the world, right? And Pepsi really needs them to succeed because that stake that Pepsi owns, Pepsi's got a big stake. Last time I checked, I believe they now own a double-digit percentage of Celsius. So once again, if Celsius becomes, a $50 billion market cap, like PepsiCo's ownership stake could end up being worth $10 billion. I can't remember the specific number exactly how much Pepsi owns, but I'm like, is a possibility that Pepsi's ownership stake becomes many billions of dollars and potentially even 10 or $20 billion over the coming years, right? If Celsius really knocks us out of the ballpark. So both brands are there and we'll see what happens. But I think this is one of the best opportunities I can possibly find in the stock market, right? Number 5 of these 5 stocks is, you ready? SoFi Technologies. SoFi Technologies, the stock that has returned me 123% so far. Now, SoFi Technologies, you got to understand, they're on their way to becoming a financial giant, in my opinion, right? Clear as day. They're somewhere around 15 million members deep now at this point in time. They continue to attract members rapidly. They're doing a phenomenal job attracting especially people under the age of 40, not to say their whole customer base under 40, but that's very important. You want to attract people when they're younger to these, somebody like a SoFi, because then they're going to be, let's say you attract let's say somebody is just going to start their financial life, really. They just graduated high school. They're 18 years old. All right. That's the time you want to get them in your banking system. So if SoFi can do a great job attracting that 18-year-old, that 18-year-old's going to go to college probably. They're going to get a degree. They might need student loans, right? They're going to buy a car. They're going to need a car loan over time. They're going to need home loans. They're going to need credit cards, as they build their financial life over the years. And if SoFi got in with that person when they were young, they're going to probably be good forever, right? And so no different than JP Morgan attracted me back in the day. They had some sort of, I think it was a $250 bonus. Like if you set up direct deposit with JP Morgan, boom, you got a $250 deposit as long as you had checks coming in from your job, for I think 3 months straight or something like that, right? And guess what? I still do business with JP Morgan all these years later, right? And so, I'm sure JP Morgan's made fortunes of money off me over the years. And so SoFi has a chance to be the next generation's at, and they don't have to worry about all the if you really think about the old banking companies, right? JP Morgan, Bank of America, Wells Fargo, you can go through a whole list of them, right? These companies were very branch focused. They needed physical locations. They want to be in every single corner. They need ATMs all over the place. Very expensive, very expensive. SoFi's asset light. And Anthony Noto's trying to keep this company as asset light as possible and trying to just be a middleman, taking fees more than taking on loan risk. And so SoFi's opportunity long term is unbelievable. Like the way I view every share I buy in SoFi is like I'm buying the next financial giant. And the main thing Anthony Noto just has to do leading this company is make sure he never gets the company over leveraged. And as long as he doesn't get them over leveraged, then they won't go under during a recession, which means they can get through the recessions and then capitalize on the great financial cycles in the future. And so SoFi is, in my opinion, the most well-positioned financial company I could possibly see out there. And so they're really, in my opinion, on their way to becoming a financial giant, right? And I spoke about SoFi immensely in this video here from 5 days ago. It's got 163,000 views so far. This stock will make more millionaires than any stock ever. If you guys haven't got the chance to watch that video yet, you might want to check that one out in the video. I spoke about a lot of subjects other than SoFi stock and some other opportunities I see out there in the market and things like that. But yeah, check out that video if you want to learn a little bit more about SoFi and what's going on there and some of the recent news that's happened in regards to SoFi, okay? I appreciate y'all for joining me for today's video. I hope you got a lot of value out of this one. Some of my best opportunities I could possibly see in the market. And I hope you also enjoyed the beginning of this video as well. And just some advice on handling this sort of market we're in right now, right? Once again, we will be closing the private group to new members in June. So if you want to join us in there, do it ASAP. That will be the pinned comment down there. And get access to all my course curriculums, become a master of stock market course, millionaire playbook, stock options mastery, dividend investing mastery, financial statements mastery. If you want to learn how to properly value companies and try to figure out if you're getting a good deal or a bad deal on a stock, check out my valuation mastery course as well that you get access to when you join us in the private group. You get access to my private Discord chat, all the 6, 7 figure, 8 figure members we have in the private group, which is amazing, right? Access to 1000xstocks.com, access to exclusive weekly videos, see the moves I'm making in my portfolios, all that good stuff. Much love and have a great day.